Hello all my dear students, I hope you all are doing good. So we have started with the revision of your CA final direct tax full English for your May 23 and November 23 exams, and we have already uploaded certain parts. So let's go ahead with the next part. And in the last part, we have done the topic called as penalty. We have done till the chapter of penalty in the last topic. There is one topic in between, that is dispute resolution committee, that will be dealing later on. Don't worry, there is a long circular on that. So along with that circular, whenever that circular will come, we'll be doing this topic also. Okay. So now today's agenda would be to complete this particular topic, set off and carry forward, and then there are certain small topics like investment fund, like securitization trust, and then TDS and TCS, the biggest one, which is one of the most important topic in your CA final direct tax. Okay, so let's start with the discussion of set off and carry forward of losses. Now there are various steps in set off and carry forward of losses. The first step is inter-source adjustment when you set off within the same head, that is PGBP, PGBP, IFOS, HP, CG, CG. So within the same head you can set off, that is known as inter-source adjustment. But within the same head also there are some restrictions. There are 4 restrictions. The losses of speculation business can set off only against speculation business only. It cannot set off against non-speculation business. That is not allowed. So speculation loss will set off only against speculation income, and it cannot set off against non-speculation income. Second, the loss from the activity of owning and maintaining racehorse can set off only against similar income. It cannot set off against other income. Third one, the long-term capital loss can set off only against long-term capital gains. It cannot set off against short-term capital gains. That is not possible. Fourth one, 3580 business loss can set off only against 3580 business. It cannot set off against other business. That is not possible. Sir, is non-speculation business loss allowed to be set off against speculation business? That is allowed. Vice versa is possible. But speculation business loss cannot set off against non-speculation business. Sir, is a short-term capital loss allowed to set off against long-term capital gains? That is possible. But vice versa is not possible. Long-term capital loss cannot set off against short-term capital gains. Okay. Now, once the inter-source adjustment is done, the next step could be to set off the loss with the other head's income. So can I set off my loss with the other head's income? So this was within the head. So now let's go beyond the head of income to set off the loss. Yes, here also there are some exceptions where you cannot set off the loss beyond the head. First is speculation business loss cannot set off against other heads. Within the head also it can set off only against speculation business income. Second, horse race loss cannot set off against other head. Within the head also it can set off only against the horse race income. Third, capital gain loss cannot set off against other head. Within the head also it can set off only against long-term capital loss, only against long-term, but short-term capital loss can set off against short-term gain also and long-term gain also. Both are possible. Fourth one is a new one. PGBP loss cannot set off against salary income. Not allowed against salary income. Next, 3580 loss cannot set off against other heads. It can only set off against 3580 business. And last but not least, if there is an exempt loss from a source which is exempt in nature, it cannot set off against any income. Exempt loss are lapse, like example, agriculture business loss are exempt. Agriculture income is exempt. So the expenditure incurred in case of agriculture, if there is a loss, then that loss is also lapse, that cannot be allowed. Next. For house property, there is a restriction. If there is a house property loss, it can set off against house property income without any limit. But if the house property loss is to set off against other heads, if the house property loss is to set off against salary or CG or capital or PGBP or IFOS, then there is a restriction that it can set off maximum how much? Maximum 2 lakh rupees. It cannot set off more than 2 lakh rupees. Maximum 2 lakh rupees house property loss can set off against other heads. Okay. Next, once this has happened, we need to talk about now carry forward of loss. First inter-source adjustment, then inter-head adjustment, and now we will talk about carry forward of loss. First, we will carry forward the loss of house property. Now, always remember one funda. Once you carry forward the loss now, after that you cannot set off against other heads. You have to set off against the same head only. Like house property loss, once it is carried forward to the next year, it will set off only against house property income. It cannot set off against other head. So, house property loss can be carried forward and set off against only house property income, not against any other income, and it can be carried forward and set off for 8 assessment years. Secondly, for carry forward the house property loss and unabsorbed depreciation, do you know that there is no need to file the return also on time? You can file a belated return and you can carry forward the losses of house property and unabsorbed depreciation, if you remember that. Okay. Next, section 72, which talks about non-speculation business loss. If you want to carry forward the non-speculation business loss, you can carry forward under section 72 and you can set off against any other non-speculation business loss, and you can also set off against speculation business loss. There is no restriction in that. There is a restriction on speculation loss, not on non-speculation loss. That for how many years it will be carried forward? It will be carried forward for a period of 8 years. Can it be carried forward even if the business is discontinued? Yes. If your business is discontinued and you start up with a new business, you can set off even with the new business which was set off, you can set off the loss of your discontinued business with the new business. There is no harm in that also. Next. There is one fundamental thumb rule of carry forward and set off of loss, that losses will be carried forward by the same person who has incurred the loss. And therefore, this is the fundamental rule that everybody has to follow across the country. That if I have incurred the loss, I will only carry forward. My parents cannot carry forward. My wife cannot carry forward. My children cannot carry forward. But there are some exceptions to that. The exception number one is the death of an individual. If there is a death of an individual, then the legal heir of the individual can carry forward the loss. For example, I am dead. So my legal heir is what? My wife is my legal heir. My children are my legal heir. Can they carry forward the loss? Yes, they can carry forward the loss. It was held by Supreme Court in the case of Madhukant M. Mehta that in case of a death of an individual, the legal heir can carry forward the losses of what? Of the disease. Similarly, if there is a partnership firm which is dissolved, so in case of a partnership firm, if it is dissolved, can the partner carry forward the loss? That is not allowed, because partnership firm is not a death of an individual. Only in case of death of individual that is allowed. Otherwise, it is not allowed. Next. By default, you can carry forward the non-speculation loss for how many years? For 8 years. But there are some exceptions where you can carry forward for more than 8 years. First one is 35 AD loss. You can carry forward 35 AD business loss for infinite number of years. Infinite. There is no time limit. Second. The case of section 41 subsection 5. Now, what is this section 41 subsection 5? Let me explain you. Suppose in 95-96 there was a loss and your business was discontinued, and suppose after 20 years you recover some bad debts, or you recover some expenses from your customers, etc. in 41.1, in 41.3, in 41.4, in 41.4a. So the government says that whatever was the bad debts in the year of discontinuance of business, you can set off against the recovery under section 41 subsection 3. Like in this example, there was a loss in 92-93 of 5 lakhs, in 93-94 of 8 lakhs, and in 94-95 of 10 lakhs, and in 94-95 the business discontinued. Now almost after 22 years, Mr. X recovers 13 lakh rupees. So against this 13 lakh rupees, he can set off not all the loss, only the loss of the year of discontinuance. He cannot set off the loss of earlier years. He can set off only the loss of the year of discontinuance, and he will set off the loss of 10 lakhs, and this 93-94 and 92-93 loss will be lapsed. This is what this provision has to say. So when you recover the amount, you can set off the loss only of the year of discontinuance. When was the business discontinued? 94-95. That much loss you can carry forward. Next exception, where you can carry forward the loss for more than 8 years. Generally, what happens if your business is discontinued because of some reason like flood, earthquake, etc. And if you revive your business within 3 years from the end of that financial year, then the government allow you to carry forward the loss for what? Another 8 years. For example, there was a loss which was already 6 years old, and suddenly your business was closed because of some of the reasons, some of the natural or man-made reasons like flood, earthquake, riots, etc. So there was a loss which was already 6 years old, which was about to lapse in the next 2 years, but suddenly this happened, and then after this happened, within 3 years you revive the business. So if you revive the business within 3 years, so the government will allow you those 6 years old losses for another 8 years. So for another 8 years you can carry forward those losses. That is what it is mentioned over here in this entire provision, and the example which is mentioned over here, you can check it over here. Next, speculation loss, which is mentioned in section 73. I can carry forward speculation loss for how many years? For 4 years, and it can set off. There is a restriction only against speculation business income. It cannot set off against non-speculation business income. 73A loss, which talks about 35 AD business loss. I can carry forward and set off for infinite number of years, but I can carry forward and set off only against 35 AD business. I cannot set off and carry forward against other business. Long-term, short-term capital gain loss. I can set off long-term capital loss only against long-term, but short-term capital loss against both, and I can carry forward for a period of what? 8 years. Loss from the activity of maintaining and owning race horses. It can set off only against similar income. It cannot set off against other income, and I can carry forward and set off for how many years? Only 4 years. Sir, what about loss from the activity of maintaining camel races? Camel races is not mentioned over here. Camel races will be covered under normal business and profession, and it will be carried forward and set off under section 72. Apart from horse, any other animal is there that will be carried forward and set off under section 72. This section is dedicated for racehorse, and racehorse. Now let's come to the most important section of this chapter, section 79, which is applicable to a closely held company. It is only applicable to a closely held company. And what does this provision says? This provision says that in case of a closely held company, your loss, if you want to carry forward, then your 51% of the shareholders on the last day should be same. For example, in 21-22 there is a loss. So on 31st March 2021, whomsoever is the shareholder, if they want to carry forward the loss to the next year, then on 31st March 2023, the 51% of the shareholders in value has to remain same. The 51% shareholders are not same, then they will not be allowed to carry forward the loss. Check it please. Which year you have to check? You have to check the last day of the year of loss and last day of the year in which you want to set off. The last day of the year of loss and the last day of the year in which you want to set off, 51% of the shareholders have to remain same on both the days. Okay. Now, there are certain changes which the government does not consider as a change only. It means if they are changing because of these reasons, then you do not consider that as a change. Okay. First, if there is a death of a shareholder and there is a change in the shareholding, that is not considered as a change. Okay. Second, if a gift of share is given to relative, if some shareholders have given gift to the relatives, then that change is not considered as a change only. And third, if there is a, listen carefully, third one is slightly complicated. Suppose there is an Indian company over here and there is a foreign company over there in United States, and that foreign company is a holding company of the Indian company. Indian company is a subsidiary company and Indian company is having a loss. Now, if that foreign company is getting amalgamated with another foreign company, so this foreign company will transfer all the shares of the Indian company to the new company, right? So in that case, today the shareholder of this Indian company is this below company, but if amalgamation happens, the shareholder will change to the above company, right? So in that case, the loss of this company might be lapsed. So the government has given a relaxation over here that this Indian company, which is a subsidiary of a foreign company, their loss will not be lapsed if 51% of the shareholders of the foreign amalgamating company continue to be the shareholders of the foreign amalgamated company. If 51% of this company becomes the shareholders of this company, then the loss of this company will not be lapsed. Check it, please. Plus, this section is only applicable to loss. This section is not applicable to unabsorbed depreciation. Now, by default, what you are supposed to check for a closely held company, that 51% of the shareholders in value are supposed to be same on the year of loss and in the year in which you want to set off. On which day? On the last day of the year of loss and on the last day of the year of set off. Okay. Now, for eligible startup companies which are covered under 80 IAC, the government has given two benefits. First of all, they can check the percentage criteria. That is, if their 51% shareholders are same, they can carry forward the loss. In case their 51% shareholders are not same, the government has given them one more benefit, that at least all the shareholders should remain same. If they cannot keep their percentage at 51%, at least all the shareholders should stick to their seat. Let me give you an example. Like in this example, there are 4 shareholders, okay, in 21-22, and 30%, 20%, 20%, 20%. This is your capital, 3 lakh, 3 lakh, 2 lakh, 2 lakh. Now, all the shareholders are sticking to their seat. They are not leaving the seat, okay, and they are introducing new shareholders also. They are introducing new investors. EFGH, all of them are investing 50 lakhs, much higher than what we are investing. What these people are investing, much higher than that. Now, if I check the 51% shareholders, are they same? They are not same. Here, the shareholders who are 100% shareholders, here those shareholders are not even 5% shareholders. Okay, so 51% shareholders are not same. So they will not get benefit over here, but they will get benefit over here because all the shareholders are same. So if this criteria is also fulfilled for eligible startup, that is much more than sufficient. Okay, so eligible startup can take a benefit under this clause also. Either 51% of the shareholders can be same, or if 51% of the shareholders are not same, at least all shareholders should stick to their seat. They should not leave the company. Okay. Now, this section 79 is not applicable to 4 types of company. Let me tell you all about all of them one by one. There are 4 types of company to whom section 79 is not applicable. What do I mean by this? I mean, to these 4 companies, they don't have to check that whether 51% of the shareholders are same or not. They don't have to check all these things. They can carry forward the loss without any hesitance. Okay. First is what? Any company who has applied to insolvency and bankruptcy court. So if a company has already applied to an insolvency and bankruptcy court for resolution, for revival, then this section is not applicable. Second, if there is a company or the subsidiary of that company or the subsidiary of that subsidiary, which is this company, the central government has moved a petition to what? To NCLT. Suppose there is a company who is doing something wrong. So the central government has moved a petition to NCLT, National Company Law Tribunal, and National Company Law Tribunal has suspended the board of directors of such company, has appointed new directors, and has changed the shareholding of the company. So in that case, if 51% of the shareholders of that company or the subsidiary of that company or the subsidiary of that company, if the 51% shareholders change, they don't have to worry. Their losses will be carried forward without any hesitance. Okay. So which is this company? It is a company about which the concern is raised by central government. Central government has moved a petition to the NCLT and NCLT has accordingly reacted and changed the shareholding. Okay. Third one. In these 2 cases of companies, let me tell you one more additional point for these 2 companies. For these 2 companies in MAT also, there is a special benefit for both these companies. In MAT also, generally what happens, in MAT, you get the deduction of either UAD or brought forward loss, whichever is less. But for these two companies, the government has said that we will allow you UAD also and we will allow you loss also. We will allow you both. For these two companies, both the deductions are allowed. UAD is also allowed and loss is also allowed. Okay. Next is an amendment made by Finance Act 2022. Now, this is done for the purpose of strategic disinvestment of Air India with Tata's. So, in case of Air India is getting what? Merged with Tata's. That is, if Air India is getting, that is a public company, is getting merged with a private company, their losses will not be lapsed subject to some conditions. Okay, that is what it is mentioned. And the fourth one, I am not saying much because that is dependent on section 47(7) AC, which as of now we don't know what 47(7) AC and 7AD is all about. Later on, whenever it will come, I'll be speaking about that. Don't worry. Next one is losses cannot be set off against lottery income, horse race, winning, all those casual incomes. Losses cannot be set off. All those casual income are subject to flat tax of 30%. Further, losses are not subject to set off against 115BB in income also, which we have done in the chapter of penalty. What is 115BBE? Where the tax rate is 78% tax, losses are not allowed to be set off against that income also. Plus, losses must be set off immediately every year. You cannot accumulate your loss and say that I will start to set off after 5 years or I will start to set off after 8 years. No, you cannot do that. You have to immediately carry forward and set off the loss. Okay. So next is a Finance Act 2022 amendment which talks about certain losses which are to be whether to be set off against undisclosed income or not. For example, if there is a search at your place and there is some undisclosed income found against you, or if there is a survey at your place and there is some undisclosed income found against you. So what assessee used to do? Assessee used to set off their old losses against such undisclosed income, and they used to say that we don't want to pay any tax. So now the government of India has made a provision whereby they have said that if there is a search initiated against you or a requisition under section 132A, or if there is a survey other than a TDS or TCS survey, and there is an undisclosed income found against you, then against that undisclosed income, we are not going to allow you any losses brought forward or current year, any UAD brought forward or current year. We are not going to allow you anything. We are going to directly tax that. Otherwise, the entire objective of finding an undisclosed income is getting defeated. Okay. It means a person who has lots of losses can hide income. It means a person who has lots of losses does not have any fear of what undisclosed income, because whenever the department will catch, we will say that we have losses, please set off that undisclosed income against the losses. So we are not going to allow the losses or UAD against the undisclosed income if it is caught under survey or it is caught under search other than the survey which is of TDS or TCS survey. Okay. So this is what this amendment which was made by Finance Act 2022. Now, next one is a Gujarat High Court judgment. Very important judgment. Assessee was engaged in the business of fertilizer. The department sold the, so the government of India sold the assessee to sell the fertilizer at a very less price. So the assessee said that if I sell the fertilizer at a very less price, I will be making losses. The government says that no worry, you sell the fertilizers to the farmer at less price, otherwise farmers cannot survive. So what about my losses which I have to incur? I am selling at a lower price, I will be incurring losses. So the department said whatever loss you will incur, we will compensate you. I said how you will compensate? The department said that we will give you fertilizer bonds. I said what will I do with that fertilizer bond? The government said that you can sell that fertilizer bond in the market. So now, government has compensated me the loss on sale of fertilizer through a fertilizer bond. So I took that fertilizer bond and I sold that fertilizer bond in the market, and there is a loss on that sale of that bond. Listen carefully. On the sale of that bond also there is a loss. So what will be that loss treated as? So the government said that, the assessee said that loss should be treated as a business loss, because that fertilizer bond was not an investment decision. That was a business decision that was given as a compensation in business. And if I'm selling that bond and if there is a loss, that loss should be allowed as a business loss. Even Gujarat High Court said the same thing, that loss should be allowed as a what? Business loss only. Okay. And last but not least, order of set off of losses. How will you set off and carry forward of loss? Always remember that you will set off first of all the current year depreciation, because it is mandatory to carry forward and it is mandatory to claim depreciation. Then you will always take the current year capital expenditure on scientific research and the current year expenditure on family planning. Always remember, you will take first of all the current year expenditures, and then you will take the losses, and then you can take the unabsorbed depreciation, unabsorbed capital expenditure and unabsorbed family planning, because these three are almost treated in the same manner. Okay, this is what the chapter of set off and carry forward is all about. We just revised this topic, very important topic, big topic, in 20 minutes. You can see very comprehensively. So now let's go ahead with the next topic, which is a small topic by the name called as taxation of investment fund. What is an investment fund? It's a fund which is raising money for members and then investing at different places. It's just like a mutual fund only, which is registered by SEBI. It is like a mutual fund. I'm sorry to say that it is just like a mutual fund. It is similar to mutual fund, but it operates in a slightly different manner, not like mutual fund. How it operates, we'll come to know in this chapter. Okay. So now pay attention, please. What is an AIF? AIF is a fund which is established in India in the form of a trust, company, or LLP or body corporate, which has been granted a certificate of Category 1 or Category 2 AIF under SEBI or under IFSC Act 2019. Okay. Now let's try to understand the implication of this one by one. We need to understand two things over here. First, what is the taxability in the hands of the AIF, that is investment fund, and what is the taxability in the hands of the unit holders? We need to understand these two aspects over here. First of all, if a PGBP income is earned by AIF, then AIF will pay tax. It will also pay MAT on that if MAT liability is there, and if it is a company. And in case of unit holders, the PGBP income is exempt under Section 10. Under Section 10, it is exempt. Therefore, there is no MAT liability. Apart from PGBP, what about other incomes? Other incomes like HP, CG, IFOS, all incomes, investment fund is not liable to pay tax. Investment fund is only liable to pay tax in case of PGBP. Other incomes, investment fund is not liable to pay tax, and investor is liable to pay tax. So this is a diagonal taxation. Diagonally, it is taxed. What is exempt over here? It is exempt over here. It is taxable over here. It is taxable over here. Now, the question is, under what head of income the unit holder will show the income? Unit holder will show the income under the same proportion in which the fund has shown. If suppose if fund has earned HP, CG and IFOs in the ratio of 50, 30 and 20, then the unit holder will also show the income in the ratio of 50, 30 and 20. Be very careful. Okay. Next. Is the fund liable to deduct TDS? Yes. In case of investment fund, the PGBP income, there is no liability to deduct TDS, because PGBP income is exempt in the hands of investor. But in case of other than PGBP, HP, CG, IFOs, if that income is distributed to the shareholder, to the unit holder, then the TDS has to be deducted. In case of resident, it is 10%, and in case of non-resident, it is rates in force. Okay, rates in force is defined under the Finance Act. Here it is not mentioned. Okay, so for you also it is not important to remember that rates in force. Now, what about the losses? Income we have segregated. That PGBP income fund will pay tax, investor exempt. Other income fund will exempt, investor taxable. What about losses? PGBP loss, always fund will carry forward and set off. Investor you cannot pass on because it is taxable in the hands of fund. So it should also be carried forward and set off by the fund only. Investor have no right over the PGBP loss. What about other losses? Other losses. If the unit holders have not held the unit for at least 12 months, it means the unit holders have held the unit for less than 12 months, then you cannot carry forward that loss to the unit holder. You cannot carry forward that loss to the unit holder. It means if the unit holders have held the unit for at least 12 months or more, if the unit holders have held the unit for at least 12 months or more, then the CG loss, IFRS loss and the HP loss can be given to the unit holder and they can carry forward. Be very careful. In this also there is one catch. Current year loss will be set off by the fund only. Whatever is the leftover loss, that can be carried forward by the unit holder. Be very careful. If there is a current year HP loss, then it will be set off by the fund only in the current year. And after that, if it is left, then you have to check the unit holder is older than 12 months or less than 12 months. If it is less than 12 months, don't give to the unit holder. If it is older than 12 months, then you have to give it to the unit holder. Be very careful. I am again saying current year losses have to be first set off. And after setting off, if nothing is happening, then you have to give it to the unit holder. Okay, to carry forward. So be very careful. What are the tax rates of AIF? The tax rates of AIF, if a AIF is a company or a firm, then the normal tax rate of 30%, 25% or 30% as the case may be. Whatever is the normal rate applicable. If AIF is other than a company and firm, then MMR will be the tax rate, that is 42.744% will be the tax rate of the AIF. Now listen carefully what I am trying to say. This is a very important point which I am trying to say to you. Suppose if AIF has earned approximately say 1,000 rupees of PGBP and 1,000 rupees of other incomes. So PGBP is taxable in the hands of AIF, exempt in the hands of investors. So no TDS on PGBP. What about TDS on other income? Other income you have to deduct TDS. Now suppose out of 1,000 I distributed entire 1,000. So I will deduct TDS on entire 1,000. Now suppose second case, if out of 1,000 I distributed only 700. So out of 1,000 I distributed how much? Only 700. Then also the government says that in case of AIF, you have to deduct TDS on entire 1,000. Here the TDS is deducted on accrual basis, not on payment basis. So if the fund is earning an HP income, CG income or IFRS income of 1,000 rupees and distributing only 700, you will not deduct TDS on 700. You will deduct TDS on entire 1,000 rupees only. Entire 1,000 rupees will be subject to TDS. And then investor will also show 1,000 rupees as his income. And in next year, when you will distribute the remaining 300, at that time you are not supposed to deduct TDS. This concept of deemed accrual is applicable in this chapter. in next chapter, but in the chapter of business trust, which we are going to be doing later on, much later on, there this concept is not applicable. This concept is applicable here. Be very careful. This is a very important point over here. Whatever income is earned by the fund, entire amount has to be subject to TDS, whether distributed or not distributed, it doesn't matter. Next, income is exempt in the hands of AIF, then it is also exempt in the hands of unit holders. There is no harm in that. Okay, so if income is exempt in the hands of unit holders, it will be exempt in the hands of the investor also. And that's it. That's what this topic is all about. Now, this is a repetition of what I have said you earlier. You can check it above, okay, if you want. Now, taxation of securitization trust and unit holders. So, to understand the taxation of securitization trust, you need to introduce 4 players over here. So, just imagine there are 4 players. Just imagine where I am putting my hands. Suppose there is a bank over here, SBI, and there is a customer to whom bank has given the loan. Now, the bank has given the loan to customers for 20 years. Now, in 20 years, the customer is going to repay to the bank small amount. Now, the bank is fed up with that. So, bank does what? The bank set up one securitization trust, and bank tell that securitization trust that you raise money from investors, and upfront you pay me the money, and I will give you my debtors. I will give you my customers, and you take my customer, you pay me upfront money. So be very careful. There are 4 players. There is a bank, there is a customer, there is an SPV, special purpose vehicle, which is called as securitization trust, and there is what? There is an investor. So now the bank has given the loan to the customer. Now customer will repay EMI to the bank. Now the bank is fed up. So the bank is going to what? Securitization trust and saying that give me upfront money. So the securitization trust is raising money from investors and giving upfront money to the bank. Okay. So now in that case, we need to understand the taxability. The first taxability, all the income which is earned by securitization trust, whatever income is earned by securitization trust is fully exempt under 1023 DA check. This is the first point. Okay. Now, secondly, the income which is earned by securitization trust will be given to the investors. So, whether it is given or whether it is not given, if 100 rupees is earned and 100 rupees is given, deduct TDS on entire 100. If 100 rupees is earned by securitization trust and if 70 rupees is given, then also deduct TDS on entire 100 rupees, just like the previous chapter. Be very careful. Deemed basis, you have to deduct TDS. Sir, how much TDS to deduct? Now let me tell you the rate of TDS. 194 LBC. You have to deduct TDS on payment or credit, whichever is earlier. If you are making payment to individual and HUF investors who are resident in nature, then 25% TDS. If you are making payment to other residents other than individual and HUF like company, etc., firm, etc., then 30% TDS. If you are making payment to non-resident and foreign company, then the rates in force, that is 30% over here. That is 20% over here. You can write it over here if you want. The other person can also give a lower certificate, lower deduction or no deduction certificate under 197. One more point I would like to add over here. If you make the payment to mutual fund companies, then no TDS. As you all know, when you make a payment to any mutual fund company, if the investor is a mutual fund company, then there is no need to deduct what? Any TDS. There is no need to deduct any TDS. Okay. So if a resident individual, if a resident individual HUF, you are making payment 25%. Other residents 30%. Non-residents rates in force. Mutual fund 0 rupees. No TDS. Okay. Now interlinking concept, which I put it over here, which is very important. ICI has put one question based on this in last RTPs. Which is based on this interlinking concept. Again, I will say in this chapter and in previous chapter, you have to deduct TDS on accrual basis. Whether you distribute the amount or not, you have to deduct TDS on the entire amount. But later on, we are going to do one topic in book 2, that is business trust. In that topic, you have to deduct TDS on payment basis, not on accrual basis. Okay, I hope it is clear to all of you. So now let's move on to the one of the most important topic of your CA final syllabus, and that is TDS and TCS. Let's talk about TDS first of all, and then we'll talk about TCS later on. Okay. The first thing which I would like to say over here, there is no TDS to be deducted on what? On GST portion if it is paid to residents first of all, and it is separately mentioned in the invoice. If it is separately indicated, if GST portion is separately indicated in the invoice, and if you are making the payment to resident, there is no need to deduct TDS on the GST portion. You have to deduct TDS on other than GST portion. Okay. Next. Generally, the other person, that is the payee, has to give a PAN. That is PAN under section 206AA. If it does not give a PAN under 206AA, then you have to deduct TDS at a higher rate. Higher rate how much? The rate which is mentioned under the relevant provision, compare with the rates in force, or 20%, whichever is higher. Whatever is the rate mentioned in the relevant provision, you have to compare with 20% and then whichever is higher. But in 2 sections, it will be compared with not 20% but only 5%. That is 194O, that is Amazon wala section, e-commerce operator, and 194Q, where you purchase more than 50 lakh goods. In these 2 sections, you will compare the actual rate with 5% and not 20%. Okay, be very careful. So now the other person has to give a PAN. Otherwise, he has to bear the consequence of this 20% or higher rate also. If the actual rate is higher, then the TDS has to be deducted as per the higher rate. Now, There are certain relaxations given over here. That is the first relaxation. Relaxation means the other person need not give a PAN. Who is the person who is not allowed to, who is not necessary to give any PAN? First is a non-resident or a foreign company is not required to give a PAN if the non-resident and foreign company is earning four incomes, that is interest, royalty, FTS or capital gains. If the non-resident or foreign company is earning these four incomes, they are not liable to give any PAN. There is no higher TDS which will be deducted in their case. They have to give some information to us. No need to give a PAN. Just give some information like name, email ID, contact number, address in which the non-resident is a resident, the certificate of his residence, that is TRC, tax residency certificate, and tax identification number, that is PAN number of that country. Okay, whatever PAN number that country has given you. So if they give this information and if they earn these four incomes, the non-resident and foreign company is not liable to give what? PAN. Further, second kind of non-resident and foreign company. If a non-resident and foreign company is earning interest on long-term bonds which are mentioned in 194 LC. So if a non-resident or foreign company is earning interest on long-term bonds which are mentioned in 194 LC, they are not liable to give PAN. They will not be attracted with higher rate of interest, higher rate of TDS. Don't worry. Next. While making the payment and deducting the TDS, are we supposed to include surcharge and cess also? Now be very careful. When you are making the payment to resident other than salary, if you are making the payment to resident other than salary, no surcharge and cess, only flat rate. When you are making the payment to resident for salary, then include surcharge if applicable, that if the income is greater than 50 lakhs or 1 crore or 2 crore as the case may be, and cess will always be included. For non-residents also include surcharge if applicable, and other cases if surcharge is applicable and cess is always applicable. So only in case of resident other than salary income resident, surcharge and cess is never applicable. For the rest of the two category, if they are applicable for surcharge includes, cess always applicable. Okay, check it once please. So now let's talk about one by one individual section wise TDS. The first section is about section 192, which is TDS on salary. Who will deduct TDS? Any person. Who is the deductee? Deductee is resident, non-resident. What is the timing? The timing is very important. It is on payment, not on credit. Salary TDS is always deducted on payment basis, not on credit basis. Keep that thing in your mind. Okay. What is the rate at which TDS is deducted? Slab rate. The average rate at which the TDS is deducted. Is the employer supposed to consider your income from previous employer? He may consider. He is not obligated. He may consider, not obligated. Okay. Is the employer supposed to consider the relief under 89.1 which is available for arrears of salary? Yes, he will consider the relief under 89.1, but for that you have to furnish. The payee has to furnish form 10E. Then only the employer will consider the relief under 89.1 and then he will deduct TDS. Will employer consider your income from all sources? He may consider. Again, he is not obligated. The way he was not obligated over here, he is not obligated here also to consider income from all the sources. He may consider income from all the sources. Will employer consider your house property losses? Yes, he has to consider your house property losses if you give him what? The relevant proof of the house property loss, that is if you give the interest certificate from the bank. Okay. Can employer himself deposit the tax on non-monetary perquisite? Yes, it is his choice, which we have already done in the chapter of PGBP. If the employer himself deposits the tax on the non-monetary perquisite, he did not deduct TDS and that perquisite is exempt in the hands of the investor under 10(10)(c). Next, is the employer liable to take all the proof for the relevant deductions? Yes, for all the relevant deductions that he is making while deducting the TDS, for all the relevant exemptions that he is giving while deducting the TDS, for all the relevant set off that he is making while deducting the TDS, he has to obtain the proof from the employee. Next. Suppose if a hotel takes from me, I am a customer in the hotel, and if a hotel takes from me service charge and give that service charge to the employee, is the hotel wala liable to deduct TDS on that service charge also? No, that service charge is not a salary in the hands of the employee. That hotel is just working like an agent. He is working in a fiduciary capacity, and therefore the amount which is taken from the customer and given to the hotel, given to the employee, will not be subject to TDS, as it was held by Supreme Court in the case of ITC versus CIT. So you have been to hotel a lot of time, though they deduct lot of times the service charges from you, they take from you. So whatever service charge, that is a kind of tip which is given to whom? Which is given to the waiters and to the other workers of the hotel. So that is not subject to TDS under this section. Okay. Next, 192A, which talks about withdrawal of money from your provident fund account. So if you withdraw your money from your provident fund account within 5 years, then it is taxable. Except in some circumstances, if you withdraw, then it is fine. That is, if you withdraw, if you are ill, then you are withdrawing, or if your business is discontinued and if you are withdrawing, or if you are transferring your employment to a new employer and you are transferring the entire amount to the new employer or to a new pension account, then it is not subject to tax. Otherwise, in normal cases, if you withdraw within 5 years, then it is taxable. non taxable. And if it is taxable, the trustees of the employees provident fund will deduct your TDS. Who are you? You are resident or non-resident? When will they deduct TDS? They will deduct TDS at the time of payment. How much TDS they will deduct? They will deduct 10% TDS of yours. And what is the threshold? If your payment of the entire year, if they make you a payment of less than 50,000 in the entire year, then they will not deduct TDS. And if the employee does not give a PAN, then they will deduct TDS over here at 42.744% and not 20%. By default, if the other person does not give a PAN, you deduct TDS at normal rate or 20%, whichever is higher. But here it is MMR 42.744%. Be very careful. Okay. Next. Interest on securities. Interest on securities means interest on bonds, interest on debentures, etc. How the TDS will be deducted on this section, who will deduct, so on and so forth. We have to see one by one all of them. Any person will deduct TDS whose TDS only resident is covered. Previous two sections, resident, non-resident, both were covered. Previous two sections, TDS was deducted on payment basis, but here TDS is deducted on credit or payment, whichever is earlier. Here the TDS will be deducted at 10%. Now, in some cases, TDS will not be deducted. If you are buying a central government or state government security, no TDS. Suppose if I buy a central government or state government security and they are paying me interest, there is no TDS which is applicable. But if you are buying a government of India taxable bond 2018, if you are buying this specific bond, then they will deduct TDS at the rate of 10%. If they make you payment of interest of more than 10,000, the threshold over here is 10,000 rupees. If you make payment to LIC or GIC or any other insurance company, there is no need to deduct TDS. If you buy a listed security, which is demat, listed plus demat, both are the same, both are fulfilled. Listed is also there, demat is also there. There is no need to deduct TDS. If it is not listed or if it is not demat, then TDS is applicable. And in that case, for individual HUF, there is a threshold of 5,000. And for others, that is if you make the payment to individual HUF, then up to 5,000, no TDS. Above 5,000, you are supposed to deduct TDS. But for others, if you make the payment to company, firm, LLP, etc., there is no threshold which is applicable over here. Check it, please. So let's go ahead with the next interest, with the next TDS, which is also on interest, which is other than securities. Okay, who is the deductor here? Deductor here is any person. Then we have to refer one note later on. Now that is a common note for a lot of sections like 194A, 194C, 194H, 194I, 194J. And there are many other sections as well for which this note is applicable. So this note, refer note, you'll be able to see again and again. So don't get confused. We'll be talking about that later on, all of them together. Okay. Now who is the deductee? Deductee is resident. What is the timing of deduction? Credit or payment, whichever is earlier. What is the rate of TDS? Rate of TDS is 10%. Now there are around 10 cases in which you are not going to deduct the TDS under this section. Now, what mainly comes over here? Mainly what comes over here is when a bank pays you interest, when a cooperative bank pays you interest, when a post office pays you interest, when NBFC pays you interest, or any person pays you interest other than interest on security will come over here. Now, pay attention please. When a bank will pay you interest, they will deduct TDS if the aggregate payment of interest in the entire year exceeds 40,000. The same is the limit for cooperative bank, the same is the limit for post office. But in any other case like NBFC, etc., or any other company, etc., say Mahindra Finance Limited, if they are paying you interest, or NBFC, if they are paying you interest, then for them the limit is 50,000 rupees. Now in this also, for whomsoever the limit is 40,000 rupees, if the payee is a resident and senior citizen, then 40,000 limit will become 50,000. But in case of 5,000, it will remain 5,000 even in case of senior citizen also. So the benefit of senior citizen is only in case of what? The 40,000 limit. It is not in case of the 5,000 limit. Okay. Now TDS is to be deducted only on time deposit. Time deposit means it has to be deducted on fixed deposit, or it has to be deducted on recurring deposit. TDS is never ever deducted on saving bank interest. Be very careful. Okay. Next, if a bank is adopting a CBS system, that is core banking solution system, then the limit of 40,000 and 50,000 has to be computed by taking all the branches taking together. For example, I am Mr. A. I am holding one FD in HDFC Mumbai branch and one FD in HDFC Delhi branch. Then the HDFC, if the HDFC is connected through core banking solution, then the limit of 40,000 and 50,000 will be aggregate of both the branches taking together. Suppose first branch is paying me 25,000 and another branch is paying me 40,000 or 20,000, then the limit will be aggregated and then it will be found out whether it crosses 40,000 or 50,000 or not. Be very careful. Okay. Next. In these cases, there are around 10 cases I have said you in which you are not supposed to deduct TDS. Now this was the first case which I have addressed. Now the second case, where you make payment to bank, you are not going to deduct TDS. Even if it is a branch of a foreign bank, then also you are not going to deduct the TDS. Whenever you make a payment to bank, even a branch of a foreign bank, you are not going to deduct the TDS. When you make a payment to a cooperative bank, you are not going to deduct TDS. Any financial corporation which is established under central, state or provincial act, you are not going to deduct TDS. LIC, UTI, you are not going to deduct TDS when you make payment to these people. When you make payment to any company or cooperative society, carrying on the business of insurance. So if the company or cooperative society is carrying on the business of insurance, you are not going to deduct the TDS in that case. When you make the payment, when a partnership firm makes the payment to partner, you are not going to deduct the TDS, but be careful when the partnership firm make the payment to a non-resident partner, then TDS has to be deducted under section 195. Be very careful. Be very careful. When a partnership firm makes payment to a non-resident partner, then you have to deduct TDS. Then point number 4, point number 5, point number all these things I will explain you with the help of this chart. Be very careful. With the help of this chart, you will understand everything. If a cooperative bank makes the payment to customer, they will deduct TDS if it crosses 40,000 in case of normal person, and in case of resident senior citizen if it crosses 50,000. When a customer makes payment to cooperative bank, we are not liable to deduct TDS as I mentioned above. When a primary agricultural bank or land mortgage bank or rural development bank make payment to customer, they are not liable to deduct TDS. When a cooperative society make payment to its member means who are shareholders, or a cooperative society makes payment to another cooperative society, they are not liable to deduct TDS, but these people will get an exemption only if their last year's gross turnover is up to 50 crore rupees. If these people's last year's gross turnover is greater than 50 crore rupees, then these people are also liable to deduct TDS when they make payment to these people. They refer the note below. So point number 3 and point number 4 will get relaxation only if their last year's gross turnover is up to 50 crore rupees. If it crosses 50 crore, they are liable to deduct TDS. Similarly, if a bank makes the payment to its member, they are liable to deduct TDS. So bank making payment to member, liable to deduct TDS. Cooperative society making payment to member, not liable to deduct TDS. Okay, the limit of TDS will be same as 40,000 and 50,000. On saving bank account, you are not liable to deduct TDS. When income tax department gives you refund of income tax, and when they give you interest along with the income tax, they will not deduct TDS on interest. But when income tax department gives refund to a non-resident, and when they pay interest to non-resident, they are liable to deduct TDS on that particular case. Okay, next, when you get any interest on compensation from motor accident claim tribunal, you have filed some case with tribunal under the motor accident claim tribunal, and they are liable to pay you compensation. Now they are not paying you the compensation on time, so they are liable to pay you interest also. So now in that case, the TDS is deductible on payment basis, not on credit basis. And here the threshold for payment is 50,000 rupees for every person. So be very careful, do things over here. When a motor accident claim tribunal tells you to make the payment, you have to make the payment, you have to deduct the TDS on payment basis first of all, not on credit basis. That too if the payment exceeds 50,000 rupees. This is the threshold over here. When a zero coupon bond is redeemed, no TDS is deducted on zero coupon bond. And when a TDS, when an interest is paid by special purpose vehicle to a business trust, it is not subject to TDS because such interest in the hands of business trust is exempt. You will learn this particular point later on in the chapter of business trust. Don't worry about it. Okay. So these are the 10 points in which case you are not liable to deduct TDS at all. Next. When a bank pays you interest, how does the bank compute interest on your FD and RD? Bank computes interest on your FD and RD on a daily basis. But does bank credit interest on a daily basis? Bank does not credit interest on a daily basis. They compute interest on a daily basis. Therefore, whether the TDS is to be deducted on a daily basis, the answer is no. The CBDT has clarified that the TDS has to be deducted on a quarterly or half yearly or yearly basis only as per the practice followed by the bank. You are not supposed to credit, you are not supposed to deduct TDS on a daily basis. Daily basis, you are just supposed to compute the interest. The deduction of TDS will depend upon quarterly, half yearly or yearly, depend upon the practice which is followed by the bank regularly. Okay. Next, the government has made an amendment in Finance Act 2020 which says that if the central government wants, they can exempt anyone under this section from deduction of TDS, or they can reduce the rate from 10% to a lower percentage. Okay. Through a notification. So have they brought any notification? Yes, they have brought one notification over here which says that if a scheduled bank which is located in a specified area makes payment of interest to a member of a scheduled tribe residing in a specified area, they are not liable to deduct TDS. They are not liable to deduct TDS. Where is the scheduled bank? In a specified area. Making the payment to whom? Making the payment to a person who resides in a specified area, and that person is a scheduled tribe person. The payer, that is the bank, has to satisfy itself that the other person is a scheduled tribe person residing in a specified area, and it is referred in section 1026. The payer has to report that statement in the statement of deduction, that is under the TDS returns, And more importantly, the aggregate payment in the entire year should not exceed 20 lakh rupees. This relaxation is only up to 20 lakh rupees. If the payment made is more than 20 lakhs, then they have to deduct the TDS. Okay. So this is a notification which can be important for the exam. Now the next two sections are exactly similar to each other. 194B is about lottery, crossword, puzzle, card game, etc. And 194BB is about horse race. Both of them are same only. Both of them are saying deductors are any person, and deductee is also any person, means deductee can be resident, deductee can be non-resident. Both can be covered over here. Further, both of them says that the tax will be deducted on payment, not on credit, and both of them have TDS rate of 30%. Both of them have threshold also of 10,000 rupees. Just here in the above section, that is 194B, there is one special provision which talks about when you are giving to someone winning in kind. So what is your responsibility? So if I am giving you winning in cash, then I will deduct the TDS from the cash portion. But if I am giving you winning in kind, then how the hell I will deduct TDS from kind portion? So in that case, suppose I am giving you one car as a winning, then how will I deduct TDS? So in that case, you are not supposed to deduct any TDS. You have to ensure that the other person has paid the tax. The moment the other person gives you evidence that he has paid the tax, then only you should release the winning. Till that time, you are not allowed to release the winning. So in that case, what are you supposed to do? You have to ensure that the other person has what? Paid the tax. Okay. Once the other person has paid the tax, you have to release that winning. Otherwise, don't release the winning. Okay. Now coming to the next section, 194C, which talks about TDS on contract or subcontract. Who will deduct TDS? Again, any person, ref or note. What is that note? That also came in 194A. We'll talk about that in some time. The deductee is resident. And when the TDS will be deducted? TDS will be deducted at the time of credit or at the time of payment, whichever is earlier. Now here there are two rates. In case you are making the payment to individual HUF, then you have to deduct TDS at the rate of 1%. And in case you are making the payment to others like company, LLP, firm, then 2%. The amounts are also two over here. If you are making a single payment in a financial year exceeding 30,000 rupees, you have to deduct TDS. If the single payment is not exceeding 30,000 rupees, but the entire amount in the entire financial year exceeds 1 lakh rupees, you are supposed to deduct TDS at the rate of 1% or 2%. For example, the first payment is of 20,000, do not deduct TDS. Second 20,000, do not deduct TDS. Third 20,000, do not deduct TDS. Fourth 20,000, do not deduct TDS, because the aggregate has still not exceeded 1 lakh rupees. Now the fifth payment is of 25,000 rupees. Now deduct TDS on entire 1,05,000 rupees at 1% or 2%, as the case may be. Be very careful. Okay. Now in case of individual and HUF, if an individual and HUF is a pair and if they are making the payment for personal purpose, then TDS under 194C is not applicable. Maybe TDS will be applicable under 194M, but under 194C personal purposes are excluded for individuals and HUF. If individual and HUF are making payment for personal purpose, TDS under 194C is never applicable. Next. Now TDS under 194C is applicable for work, services. It is not applicable for purchase of goods. It is applicable for services. So what kind of work is covered under 194C? The first work which is covered under 194C is advertising. Second is broadcasting, telecasting, TV programs, etc. Third, carriage of goods or passengers by any mode other than the railway. Railways are not covered because railways belong to the government of India, and when you make the payment to government, you're not supposed to deduct TDS. Next, catering services are also covered. And the fifth point is a very general point. What is the fifth point? Be very careful. Suppose if I tell you, listen carefully, I am a person who is telling you, I want a suit to be stitched by you, and the cloth will be given by me. So if I give you the cloth and if you stitch the suit, then you are giving me services. So in that case, there are two views which are possible. If I am coming to you and telling you, I want a suit and which you should stitch and give me. You asked me, who will give the cloth? I said, I will give you the cloth, and I gave you the cloth, and now you are stitching the suit and giving me. You are a tailor. You are stitching the suit and giving me. Now in this case, if you give me the breakup of this much is the cloth value, this much is the stitching charges, then I will deduct TDS only on the stitching charges, that is service portion. But if you do not give me the breakup, how much is the stitching charges, how much is the cloth value, then I will deduct TDS on the entire portion. I will deduct the TDS. This is what this provision wants to say. That's it, nothing else. Now second example, suppose if I come to you and I tell you I want a suit, and you ask me that from where the hell you will get the cloth. So I said you manage from wherever you want to manage. Now suppose if you go to some third party and purchase the cloth and you make the suit and then you give me, it's a pure sale. In that case, TDS is not required to be deducted. Be very careful. Check it over here. This is what the provision has to say over here. So if in this there is one more case. Okay. Now one more case is what? Suppose if I come to you and if I tell you that I want a suit, You asked me from where will I get a cloth. Suppose if I give you a cloth, then you will deduct TDS on stitching charges if the breakup is given. Now, there is one more case. If my relatives give you a cloth now, and then you stitch a suit and give me now, in that case also TDS is applicable on the stitching charges if breakup is given. If breakup is not given, the TDS will be charged on the entire amount. This is what this box has to say. This box is an amendment which was made by Finance Act 2020. Okay. So now let's move on to the next circular. There is one more circular with respect to 194C which CBDT has brought. Now in this particular provision, what CBDT has said that suppose if you are making a payment to some goods transport agency, some goods transporter, road transporter, okay, and if that person does not own more than 10 goods vehicle at any time during the previous year, the other person is what? Goods transporter, road transporter. He does not own more than 10 goods vehicle at any time during the previous year, and he gives a declaration for that. He also gives you a PAN along with that. Then you are not supposed to deduct TDS of that particular person. Considering that that is a small transporter, you are not supposed to deduct the TDS. Now there are a lot of questions which was raised over here by the CBDT and also by the taxpayer. The first question is, what if the other person gives you a vehicle which is not owned by him? Then also this relaxation will be applicable. No. Suppose if the other person has taken the vehicle on lease and then he has given you. So in that case, is he going to get the relaxation? The answer is no. He will get relaxation only and only if he owns that particular vehicle. If he does not own that vehicle, then he is not going to get the relaxation. Then you are supposed to deduct the TDS while making the payment or while making the credit, whichever is earlier. Second thing. Suppose today when I am making the payment, at that time he does not own more than 10 goods vehicle. Suppose I am making payment of 50,000 rupees today, and today he does not own more than 10 goods vehicle. So am I supposed to deduct the TDS? You are not supposed to deduct the TDS. But suppose in the next month, if his number of vehicle increases to 11 or 12, that is if it crosses 10 vehicle, then am I supposed to deduct TDS on the previous month payment which I have made of 50,000 rupees? The government said you are not supposed to make the payment of the TDS on the previous month payment which you have made, because when you made the payment at that time the number of vehicle in the hands of the other person were less than 10. It was not exceeding 10. So if in the last month the vehicle were 8 and you made a payment of 50,000, you have not deduct the TDS, and in the current month if the vehicle increases to 11 or 12, you are not supposed to go back and deduct the TDS. You are not supposed to do anything. But yes, now if you when you make the payment, if the single payment exceeds 30,000 or if the aggregate payment exceeds 1 lakh, you are supposed to deduct TDS on the entire amount. Suppose now if I make another payment of 60,000 rupees, so that 50 and 60 to count the limit of 1 lakh, you have to take that 50,000 rupees also during which the vehicle were less than 10. So to count whether the aggregate limit of 1 lakh crosses or not, you have to consider that 50,000 also when the number of vehicles in the hands of the person were less than 10. So now if you make a payment of 60,000 rupees, you have to aggregate the earlier 50,000, this 60,000, take total and then deduct 1% and 2% as the case may be. Suppose again if I reduce the number of vehicle to 7 or 8 because I sold some vehicle, now if I make the payment, am I supposed to deduct the TDS? Yes. Now suppose in the financial year, at the end of the financial year in the month of Feb or March, your number of vehicle have fallen to 7 or 6 or 5 or 8 or less than 10, whatever it is not more than 10. So in that case, if you make a payment, you are supposed to deduct the TDS, because now you cannot remain in this provision, because this provision is only applicable if the other person does not own more than 10 goods vehicle at any time during the previous year, and you already had more than 10 goods vehicle for some time during the previous year. Therefore, now if you are making the payment, you are supposed to deduct the TDS even if the number of vehicles are less than 10. On this particular issue, I have put one question in the question bank. You can go and see that question bank also for that particular question. Okay. Now let's move on to the next one. That is, suppose I am a gas owner and you are a hotel industry and I am supplying you gas along with the service charges for supplying the gas. Okay. So whether the charges which you are making for me for transportation of gas, whether that will be subject to TDS, the government said no. Here the main objective of the other person is purchase. Just supplying the gas is an incidental activity to the purchase. The main activity is not service. The main activity is purchase of gas, and purchase is not subject to TDS under 194C at least. There might be some other section where purchase is subject to TDS, but at least 194C is not that section. So the second thing which was raised is, so the question is very clear. I am a gas owner, you are a hotel industry, I am supplying you gas, I am transporting you gas, you are making me payment for transport charges, no TDS. But what if there is a third party transporter to whom I have given a contract to supply gas in every hotel and in every residential place? So in that case, if I'm making payment to that particular agency who is having the primary objective of supplying gas, of transportation of gas, in that case that service is provided to me, which is absolutely a service, and therefore in that case I'm supposed to deduct the TDS. This is what this provision wants to say. Next, is the TDS deducted on insurance commission? Yes. Who will deduct? Any person, excluding reinsurance. On reinsurance, TDS is not deducted. Okay. Who is the deductee? Resident. What is the timing? Credit or payment, whichever is earlier. What is the threshold? 15,000 rupees should exceed in the financial year. And what is the rate? The rate is 5% on what on your payment, okay, on your credit, whichever is earlier. Next. Is the TDS deducted by life insurance company? Yes, it is deducted by life insurance company when the payment is made to the policyholder, and the payment is taxable in the hands of the policyholder. The payment is not exempt in the hands of the policyholder. When is payment exempt in the hands of policyholder? The payment is exempt under section 1010D in the hands of the policyholder. So the payment should not be exempt in the hands of the policyholder. The payment should be taxable in the hands of the policyholder. Sir, when is payment exempt in the hands of policyholder? Do you remember that? If the policy is issued between 2003 to 2012, the annual premium should not exceed 20% of sum assured. After that, 10% of sum assured. After that, 10 or 15, etc., etc. Do you remember that? If you are within that limit, then it is exempt under 1010D. If you are outside that limit, then it is taxable under as per the income tax law. And if it is taxable, the question of TDS will arise. Who will deduct? The insurance company will deduct. Who is the deductee? The resident is the deductee. What is the timing? Payment, not on credit. What is the rate? It is 5% of net income. Be very careful. What is net income? The amount which is paid by the company to you minus what premium you have paid over the years. Suppose if you have paid premium for 10 years, you have to reduce the premium of 10 years from here minus what amount is paid by company. The differential amount is subject to a TDS of 5% over here. What is the threshold? The threshold over here is 1 lakh rupees. So if the payment is exceeding 1 lakh rupees in a financial year, then only you are supposed to deduct TDS. Otherwise, you are not supposed to deduct the TDS. This is also a very important provision on which there is one question in the question bank. You can see over there. Okay. Next, TDS on commission on sale of lottery. So if the lottery agent is selling the lottery, then you have to make the payment of commission to the lottery wala. Okay. So who will make the payment? Any person. Who is deducted? Deductee is any person, resident, non-resident, both. When will the TDS be deducted? Credit or payment, whichever is earlier. What is the rate? 5%. What is the threshold? The threshold is 15,000 rupees over here. So this deduction, this TDS is specifically for commission on sale of lottery. It is not for other commission. What about other commissions and brokerage? Other commissions and brokerage will come in 194H other than insurance commission, because insurance commission is already coming over here in 194G. Who will deduct TDS? Any person. Who is deductee? Resident. What is the timing? Credit or payment? What is the rate? 5%. What is the amount? 15,000 rupees. Now there are some specific points over here which I'll address one by one. If the payment is made by BSNL or MTNL of commission to its PCO franchise, if the BSNL or MTNL is making payment to its PCO franchise, no need to deduct TDS. If the commission is made as a payment to employee or employee directors, it will form part of salary and it will come under section 192. It cannot come over here. It will come under which section? It will come under 192. No TDS on brokerage, on commission, on securities. When you buy or sell shares, you pay commission, right or not, to the broker. So on that, no TDS is deducted. But if you buy or sell a commodity in the commodity market, then TDS is applicable. In that case, be very careful. Check it, please. Next, the TDS has to be deducted on retention of money by the airline company. For example, what is the point over here? There are three people over here. There is an airline company over here. There is Make My Trip, like Make My Trip, who is an airline agent who sells tickets, and there is a customer base over here. Now the Make My Trip has, the airline company has told Make My Trip that you can sell the ticket at a base price of greater than 10,000 rupees. So the base price is 10,000 and you can sell about 10,000. Suppose now if the Make My Trip sells at 12,000 rupees, so the Make My Trip will retain 2,000 rupees at its end. So that retention of 2,000 rupees by Make My Trip is also a commission under 194H. Be very careful. Similarly, if a cellular company, Vodafone, cellular company, Jio, etc., tells to its distributors and retail agents that you are supposed to sell the SIM cards and you are supposed to sell the SIM cards. I am giving you the 1,000 rupees SIM card at 950 rupees and 50 rupees is your commission. So if I am getting a recharge coupon of 1,000 rupees from Vodafone and I am getting that at 950 rupees and I am selling that at 1,000 rupees, that 50 rupees is also commission and that will also be subject to TDS and under 194H. The government has said very clearly in this CBDT circular in 1991, the consignor and consignee, when they retain the amount, that is also a commission. Suppose I want to sell some goods. So I have found one consignor, I have found one agent, and I told that agent that sell my goods on my behalf. This is the goods of 1 lakh rupees. You sell for 1,20,000 and you retain 20,000 at your end and pay me 1 lakh rupees. So I gave the goods to agent. He sold the goods of 1 lakh rupees in 1,20,000. He retained 20,000 as his commission and gave me 1 lakh rupees. That retention is also subject to what? TDS and TDS. Check it, please, fast. Now, next is a Supreme Court judgment. Now, there are three people over here. One is a client over here, one is advertising agency, and one is Doordarshan over here. Now, Doordarshan has given a contract to advertising agency that you bring clients for us. So the advertising agency is bringing client for us, and Doordarshan is retaining its commission and giving the remaining amount. The advertising agency is retaining the commission and giving the balance amount to Doordarshan. Okay. So whether the TDS will be deducted on that or not. So the Supreme Court said that yes, the commission itself is written in the agreement itself. The agreement says that that is commission. The agreement itself says that this commission will be subject to deduction of tax at the deduction of tax. Then why the hell you are not deducting the TDS? And therefore the amount retained by the accredited advertising agency, accredited means a recognized advertising agency, will be subject to TDS because it's a commission. 194H will be applicable in that case. Okay. Now let's move on to the next one. 194I. Again, here there is any person refer note. We'll talk about that note in a while. The payee is resident. The payee is resident. The TDS will be deducted on credit or payment, whichever is earlier. Now, if you take plant and machinery on rent, then it is 2% TDS. If you take land, building, furniture and fitting, then 10% TDS will be deducted. Okay. Now, the other person can give form 15G and 15H. If the other person gives form 15G and 15H, no need to deduct TDS. Further, no TDS when the rent is paid to REIT, because in the hands of REIT, the rental income is generally exempt under section 10. Therefore, when you make the payment to REIT, real estate investment trust, then in that case, you are not supposed to deduct TDS. For detail, you can go and refer the chapter of business trust later on. We will also be revising that later on. Okay. Now, there is a limit of 2,40,000 rupees over here, but this limit is an aggregate limit of all of them taking together. When I say the aggregate means plant, machinery, furniture, building, land, everything taking together is 2,40,000 rupees. Be very carefully. The limit should not be taken separately. Suppose if I take on rent plant and machinery from you, and if I also take land and building from you, then I have to take the aggregate of both and check whether 2,40,000 crosses or not. Sir, is TDS deducted on advance rent? Yes, TDS is deducted on advance rent. Warehousing charges, non-refundable deposits, all of them are subject to TDS under the income tax law. Refundable deposits are not subject to TDS, but non-refundable deposits are subject to TDS. Sir, where there are two owners, then the limit of 2,40,000 has to be seen aggregate or separate. Then you have to see separate limit for 2,40,000 for both the co-owners. So if there are two co-owners, 2,40,000 limit will be separately applicable for both the co-owners and not aggregate. Be very careful. This is an advantage to the assessee. Sir, if I go to some place as a place, if I take some place on rent for the purpose of cold storage of certain preservation of certain items, then the TDS will be deducted under 194C or 194I. So the CBDT has clarified that when you take a place as a cold storage, your main objective is to take service and not take rent, not to take place on rent. And therefore, if you take a cold storage warehouses on rent, then when you make the payment of rent, that is for services and not for place. And therefore, the TDS will be deducted under 194C and not under 194I. Be very careful. Next, when the Japan airline is landing on the Bombay airport, in the Mumbai airport, then they pay some charges of landing and parking charges to Airport Authority of India. Are they liable to deduct TDS under 194C or 194I? So the Supreme Court of India in the case of Japan Airlines Company Limited, very important case law, lot of time asked in examination, has held that the airport authority is not only giving you parking services, but they are also providing you many other services, and therefore the TDS will be deducted under 194C and not under 194I. Now next, there is a Delhi High Court judgment which says that suppose there is a building, and on the building of the terrace I am giving you some place to install some towers. So if you install some towers and pay me some rent, then you will deduct TDS under 194I, or you will not deduct TDS. So the court said that you are allowing the other person to install the plant and machinery on your premise, and you are taking rent for that purpose. Therefore, you are allowing the facility for plant and machinery. Therefore, you should deduct TDS at the rate of 2% under 194I. The assessee was saying there is no need to deduct TDS. The department was saying there is a need to deduct TDS, but as a land. That is not land. That is not land. That is a terrace of a building. That is not land. The department was saying that it is land. The assessee was saying there is no need to deduct TDS. The court said that something in between, which says that you have to deduct TDS at the rate of 2% as plant and machinery. This point I have already mentioned above. In this particular case, that is when there are two co-owners, the limit of 2,40,000 will be applicable separately for both the co-owners. Okay. Next one, when you purchase any immovable property other than the property mentioned in 194 LA and other than the rural agricultural land. So apart from rural agricultural land or apart from the property which is mentioned in 194 LA, when you purchase any immovable property from a seller being a resident and the seller being a resident, then you have to deduct TDS at the time of credit or at the time of payment, whichever is earlier, at the rate of 1% of your consideration or 1% of your stamp duty value, whichever is higher. This is an amendment which is made by Finance Act 2022. So Finance Act 2022 says that if the consideration is higher, then deduct TDS on that. If the stamp duty value is higher, then deduct TDS on that. Sir, what is the threshold over here? The threshold over here is 50 lakhs or more. The value of property has to be 50 lakhs or more, or stamp duty value has to be 50 lakhs or more. Sir, suppose if value of property consideration is 55 lakhs, stamp duty value is 60 lakhs, then deduct TDS on 60 lakhs. Sir, if the value of property consideration is 55 lakhs, stamp duty value is 45 lakhs, then deduct TDS on 55 lakhs. Sir, if the value of property is 45 lakhs, stamp duty value is 55 lakhs, then deduct TDS on 55 lakhs. So when you are not supposed to deduct TDS, when both the stamp duty value as well as the consideration is below 50 lakhs, you are not liable to deduct TDS in that case. Okay. So what if the seller has to be resident, right? Yes, the seller has to be resident. What if the seller is non-resident? Then you are supposed to deduct TDS under 195, not under this section. What if the property is located outside India and the seller is resident? Seller is resident, but the property is in Dubai. Still the TDS is applicable under 194 IA, because this section talks about the seller should be resident. The property can be situated anywhere in the entire world. The deductor, the buyer, is he supposed to obtain a TAN? There is no need to obtain TAN to the buyer. The buyer has to just fill a simple form 26 QB. That's it. There is no need to obtain any TAN over here. What if the seller does not give a PAN? If the seller does not give a PAN, the general provisions will apply. That is 20% TDS has to be deducted by the buyer. Sir, if I make payment in part, suppose if I bought a property of 1 crore rupees, I am making payment in part. When should I deduct TDS? Should I deduct TDS on every payment, or should I deduct TDS when I make the final payment? You should deduct TDS on every payment when you make, and not when you make the final payment. Sir, what if the other person is a co-owner? There are two co-owners. There are husband wife who are co-owner, and the 50-50 co-owner, and I am supposed to pay 30 lakhs to one person and 30 lakhs to one person. Then am I supposed to deduct TDS? Yes. You are not supposed to see the number of co-owners. You are supposed to see the value of property. If the value of property is 50 lakhs or more, deduct TDS no matter whether there is one owner or 10 co-owners. The value of property what matters over here. Sir, what if the seller is selling the property in the form of a stock in trade? It means seller is a builder, and if he is selling me the asset in the form of a stock in trade, am I still liable to deduct TDS? Yes. TDS is to be deducted whether the seller is selling in the capacity of a capital asset or the seller is selling in the capacity of stock in trade. It doesn't matter. In either of the case, you are supposed to deduct the TDS. Next, the TDS will not be covered under this section if your property is compulsorily acquired by the law, because for that there is a separate section under 194 LA. There the limit is also lower, 2,50,000. There the rate is also higher, 10%. I'll just show you where exactly that is. That is over here. Any person resident is the seller, and at the time of payment you are supposed to deduct TDS 10%. The limit is also lower over here. The rate is also higher over here, and you are compulsorily acquiring your property. The government is compulsorily acquiring your property other than rural agriculture land. Then you have to come to 194 LA only. Okay. Last but not least, sir, when you say you have to deduct TDS at 1% of the consideration or the stamp duty value, whichever is higher, sir, what does consideration include? Consideration include all charges in relation to the property, like club membership fee, like car parking fee, like electricity and water charges fee, maintenance fee, advance fee, any other charges of similar nature which are incidental to the nature of the which are incidental to the transfer of the immobile property. Be very careful. Next, 194J covers 5 different kind of payments. I'll be talking about all 5 of them one by one. First of all, who is the deductor? Any person. Who is the deductee? Resident. Timing, credit payment, whichever is earlier. Rate, multiple rates. By default 10%. If you are making the payment to a person engaged in call center, then 2%. If you are making payment for technical services, then 2%. If you are making certain royalty payment, not all royalty in nature of consideration for distribution, exhibition of cinematographic films, then it is 2%. So there are 3 categories of assessee to whom it is 2%. If the person is engaged in call center, then it is 2%. FTS, technical service, all kind of technical services, 2%, and royalty which is in relation to film distributions and film exhibitions, etc. And in that case, it is 2%. Okay. Now, in case of individuals and HUF, royalty and non-compete fees, if they are making the payment, listen carefully. This means what? Individuals and HUFs are not liable to deduct TDS on royalty and non-compete fees. They can deduct TDS on other aspects, but not on royalty and non-compete fees. For individuals and HUF in this section, they can deduct TDS on FTS. They can deduct TDS on professional services, but not on non-compete fees and royalty. That has been excluded. So now there are 5 nature of payment over here: professional fees, technical services, royalty. Sum referred under 28(5) is nothing but your non-compete fees, which is paid by Mukesh Ambani to Anil Ambani for not doing any business or any profession of my nature. And last, that when you make a payment to a director over and above the remuneration under 192, That is also covered. Now be very careful. The threshold over here for the first 4 item, it is 30,000 rupees separately for all 4 of them. For all 4 of them, the 30,000 limit is separately. But for the 5th item, there is no threshold. That is for directors. If you make the payment other than salary, even a single penny if you make as a payment, you are supposed to deduct the TDS. But in the first 4 case, individual payment has to exceed 30,000 and not aggregate payment. Okay, be very careful. Next one. If there is a chartered accountant, if there is a lawyer, if there is a solicitor who is in India, who is resident in India, and there is a non-resident outside India who does not have any agent or any business connection in India, the non-resident is outside India. Now they are taking some services from these chartered accountant, doctors, lawyers, and they are making payment to these people through banking channel. They are making payment through banking channel to this lawyer, to chartered accountant, to this solicitors, etc. Not doctors are not covered, sorry, solicitors, etc. Then they are not liable to deduct TDS. Who is in India? Resident lawyer, resident solicitor, resident chartered accountant. Who is outside India? Non-resident who does not have a place of business in India, who does not have a business connection, who does not have any agent in India. That non-resident is making the payment in account pay, making payment in banking channel. They are not liable to deduct TDS. Next. If an individual, an HUF, is making professional service payment for their personal purpose, they are not liable to deduct TDS under this section. Personal purpose is not covered under this section. Personal purpose is not covered in 194C also. 194C does not give personal purpose any place. This section also does not give personal purpose any place. Okay. Next, the CBDT has notified that all kind of sports activities will come as a professional service. Like if a sportsman is playing, you are making payment. Professional service 194J. Umpire, referee, coach, trainer, team physician, physiotherapist, event managers of sports are not of film fair. Film fair event management will go under 194C. It will not come over. Sports event management will come over here. Only relating to sports. Okay. Commentators, anchors, sports columnists, etc. And one last thing over here is when you go to a hospital and you admit over here there, and then the hospital sends your bill to what? To the insurance company, and insurance company send that bill to the third party administrator for verification. And after the verification, when the third party administrator make the payment of bill to the hospital, then the third party administrator is liable to deduct TDS under 194J. Be very careful about it. Okay. Now, last but not least, one common note is there over here, and this common note says that it doesn't matter to whom you credit, whether you credit to the party or whether you credit to any amount or whether you credit to any person or whether you credit to any nature of income. It doesn't matter. You have to deduct TDS. Whether you credit to any party, any income or any suspense account, you are supposed to deduct TDS in irrespective of to whom you credit. It doesn't matter. Okay. Now the common note which I was talking about, which is applicable for 194A, 194C, 194H, 194I, 194J, 194R, we are going to do. 194S we are going to do. 206C1 TCS section we are going to do. 206C1F TCS section we are going to do. For these 7, 8, 9 sections, this common note is applicable. This common note is applicable first of all for individual HUF. Which individual HUF? In the current year you are individual HUF. Then you are liable to deduct TDS and TCS under these sections only if last year's business turnover is greater than 1 crore rupees or last year's professional gross receipt is greater than 50 lakh rupees. Then only you are supposed to deduct TDS under these 9 sections, or else you are not supposed to deduct TDS in these 9 sections. So these 9 sections whenever comes in the exam, and if the question is on individual HUF, your years should go up and you should start thinking about this point, that whether the last year's turnover is greater than 1 crore or 50 lakhs or not in case of business and profession. Yes, it is. Then you should think about deducting TDS under these sections. Otherwise, do not deduct TDS. Okay, let's go ahead with the next one. 194IB. 194IB says that a person, an individual or HUF who does not come under 194I, who does not come under 194I, under 194I, that individual and HUF will not come whose last year's turnover is less than 1 crore or whose last year's turnover is less than 50 lakh. Just now I have told you 194I, individual HUF, only then you come to 194I if last year turnover is greater than 1 crore or greater than 50 lakh. So what if it is less than 1 crore or less than 50 lakh? Then 194IB will be applicable. Be very careful. And in that case, so if last year turnover is greater than 1 crore, greater than 50 lakhs, go to 194I. If it is less than 1 crore, less than 50 lakhs, come over here. Or if you are not a PGBP SSE, if you are not a PGBP SSE, the question of 194I does not arise only, then you have to come under this section, because that 194I is only for PGBP SSE, because that is putting a criteria of last year's turnover of greater than 1 crore or greater than 50 lakh. So here who will come? A PGBP SSE will come over here if the last year's turnover is less than 1 crore, less than 50 lakh. A non-PGBP SSE will also come over here if they are making a payment of rent of land and building to a resident. If rent of land and building, if I have taken some land or building on rent from a resident and the rent per month is more than 50,000 rupees, then I am supposed to deduct TDS at the time of credit or at the time of payment, whichever is earlier. But I am not supposed to deduct monthly. Over here, I am supposed to deduct in the last month of the financial year, or if I am leaving the place earlier, if the tenant is leaving the place, suppose in December, then in the month of December, whichever is earlier. So if the tenant is not leaving the place, then in the last month. If the tenant is leaving in December or November or October, then in November, December, October, how much TDS is to be deducted? I am supposed to deduct TDS at the rate of 5%. 5% of how? How this 5% will be calculated? So again, I'll speak about when I'm supposed to deduct TDS. Monthly? No. Last month. Suppose the rent per month is 60,000 rupees. So first month you will pay 60,000, second month 60,000, third month 60,000. Last month, when the last month will come, the month of March, at that time, the entire year rent you will calculate and you will take 5% of that. So what is the rent of entire year? 60,000 into 12, 7,20,000. For that 5%, how much comes to? 36,000. So you will deduct 36,000 in the last month. Okay. And you will give 24,000 to the other person. Okay. So what if the other person does not give a PAN? If the other person does not give a PAN, then you will deduct what? How much? If the other person generally does not give a PAN, how much did you deduct? 20%. But here, 20% of 7,20,000 will come to 1,44,000. You do not have that much rent only to pay in the last month. The last month rent is only 60,000 rupees. So in that case, that is the reason that government has said that if the other person does not give a PAN, then you should not, the rent deductible should not exceed, the TDS deductible should not exceed the rent of last month. So then in that case, you have to deduct 60,000 rupees TDS in the last month, and you have to say that your rent is completely adjusted against the TDS. Okay. Am I supposed to take any kind of TAN over here? You're not supposed to take any kind of TAN over here. Just a form 26 QC has to be filled by you. That's it. Once you fill form 26 QC, there is no need to obtain any separate TAN under this particular section. Okay. Next one, 194M. 194M is applicable when 194C is not applicable, H is not applicable, J is not applicable. If these sections are applicable, then deduct TDS under those sections only. If those sections are not applicable, then come under 194M. First of all, when is 194C not applicable? 194C is not applicable because of two reasons, and 194J is also not applicable because of two reasons. First, in case of individual HUF, if the last year turnover is less than 1 crore 50 lakhs, less than 1 crore 50 lakhs, 194C, 194J is not applicable. And 194C and 194J is not applicable because of one more reason. If you are making the payment for personal purpose. So because of these two reasons, either of the two reasons, 194J and 194C is not applicable. 194H is not applicable because of one reason. 194H is not applicable if the last year turnover is less than 50 lakhs or less than 1 crore. But 194H is applicable if you make the payment for personal purpose, because in 194H there is no personal word mentioned. You can go and check. Okay. Now listen carefully. So if you do not come in this section 194C, H, J, then you will come under what? 194M. If the aggregate payment of all the three sections exceeds 50 lakh rupees in a financial year, then you are supposed to deduct TDS at the rate of 5%. The aggregate of the professional fees, commission and the contract should exceed 5 lakh rupees. 50 lakh rupees, sorry. Then you are supposed to deduct TDS at the rate of 5%. Sir, who will deduct TDS? I will deduct TDS. Who is the deductee? Deductee is a resident person. You will deduct TDS at the rate of 5%. Okay. Here also, there is no need to obtain what? Any kind of TAN. No TAN is required under this section also. There is a complete relaxation given here also from deduction of TAN. You can check it over here. So let's go ahead with the next provision, that is 194N, which is one of the most important provision of this chapter, which talks about cash withdrawal from bank. So if you withdraw from bank or post office or cooperative bank, a cash withdrawal of more than 1 crore rupees, whether by resident or non-resident, it doesn't matter, from one or more account. From one or more account, if you withdraw more than 1 crore rupees, then your TDS will be deducted at the rate of 2% on the excess amount. Say for example, if you have withdrawn 1.5 crore rupees, then the TDS will be deducted at the rate of 2% on only 50 lakh rupees, not on entire 1.5 crore. Be very careful. The TDS over here is only on the excess amount, not on the entire amount. Now, there is one proviso over here which says that if the other person, that is the account holder, has not filed the return for all the three preceding assessment years. So if the account holder has not filed the return for all the three preceding assessment years, then the TDS rate is slightly stricter. Then in that case, above 20 lakhs withdrawal, you have to deduct 2%, and above 1 crore withdrawal, you have to deduct 5%. It means if such person withdraw 1.5 crore rupees, then from 20 lakhs to 1 crore, that is on 80 lakhs, 2% TDS will be deducted, and above 1 crore, it will be 5% TDS, subject to which it is given over here. Okay. Now, this is given in this proviso. Now, there is one relaxation which is given over here, which says that if the central government wants, they can bring a notification and they can relax any person from this particular provision. So if the central government wants, they can relax any person from this particular provision. It means they can move any person out of this particular proviso, or they can relax the rate under this proviso. Next. This section is not applicable if the money is withdrawn by certain people. That is, if the money is withdrawn by government, this section is not applicable. If the money is withdrawn by banking company, cooperative bank, or a post office, not applicable. If the money is withdrawn by a banking correspondent or a cooperative society correspondent, then also this section is not applicable. If the money is withdrawn by automated teller machine, then also this section is not applicable. That is ATM, white label ATM operators. Who are white label ATM operators? I'll just speak about that in a while in the below mentioned notification. Okay. Now, here it is mentioned that if the central government and RBI wants, they can exempt any person from this particular section, and they have exempted few people over here with subject to some conditions. The first person to whom they have exempted, to whom this section is not applicable when they withdraw more than 1 crore rupees, that is white label ATM operators and cash replenishing agencies. Now, who are these people? These are third-party ATM owners. Now, there are two types of owners. There are two types of ATM in the industry. One ATM which is owned by the banking industry itself, and another ATM is owned by third-party ATMs. So these are third-party ATMs. Okay. So what does bank do? Bank gives them money and they deposit the money in their ATM, and the customers withdraw the money from their ATM. Okay. So if there is a third-party ATM, that ATM is called as white label ATM operators. WLATMOs. That is white label ATM operator shortcut. So if a white label ATM operator is withdrawing money from a bank for depositing in the ATM on behalf of the bank, then they are not liable to deduct TDS if there are some conditions which they have to fulfill. They have to maintain a separate account in the bank, and they have to say that this account is only for replenishing cash in the ATM. This account is maintained to withdraw cash and put in the ATM, and every month they have to give a certificate to the bank of the reconciliation that whatever money is withdrawn from the bank is properly deposited in the ATM. There is no mismatch or gap between the two. So they have to give a reconciliation statement every month. If these conditions are fulfilled, then they are not liable to TDS. Okay. Next, if a commission agent or trader opens a bank account, and he opens a bank account and withdraw more than 1 crore rupees, that is not liable to TDS if he withdraws the money to give that money to the farmers to buy agriculture produce. So if the commission agent is opening an account and he is withdrawing more than 1 crore rupees, he is giving his PAN also, he is giving all his details, and he is certifying that I am withdrawing this money for the purpose of buying agriculture produce from the farmers, then there is no need to deduct any TDS. So be very careful. If a commission agent, registered commission agent of an APMC market, withdraws money from the bank to buy agriculture product from the farmers, there is no need to deduct TDS. Okay. Third. There is an authorized dealer of what? Foreign exchange, foreign currency, or there is a full-fledged money changer who maintains a separate account in the bank and withdraw cash. For what purpose? For what purpose is he withdrawing cash? He is withdrawing cash for purchase of foreign currency from foreign tourists or from non-residents who visit India. So there are a lot of non-residents who come to India. They will come to the money changer and they will give me dollar. So I have to give them cash now. For that I need cash. So for that I am opening a bank account from where I am withdrawing my cash account. Why? So that I can give to foreign tourists, so that I can give to non-residents who are visiting India, or so that I can give to our country people only who are coming back to our country. So there are so many people who go out of India for tourism purpose, and when they come back they have some foreign currency, so they will come back to me. They will give the foreign currency, I will give the cash. Check it please. So in that case also, if a foreign currency full-fledged money changer or an authorized dealer is opening a bank account with the intention of what? Exchanging the foreign currency with non-residents or foreign tourists or even with residents, there is no need to deduct TDS on that particular cash withdrawal. Similarly, there is some inward remittances which is coming from outside India. Suppose there is some husband which is working outside India and the wife is staying in India, and the wife is housewife, and the husband is sending money every month to the wife, say of $10,000. So in that case, the husband is sending $10,000 to what? To the agent, to the full-fledged money changer, and that money changer is changing the money and giving to the wife of that particular husband. So in that case also, if there is an inward money transfer, then that is also not subject to TDS if you withdraw the money for the purpose of giving what? The inward money transfer. Now, this exemption is available only if a certificate is furnished by the authorized dealer that I will be using my money, I will be withdrawing the money and I will be using for these purposes which are mentioned over here. So the authorized dealer has to give a certificate that I will be using the money by withdrawing the money only for these purposes which are mentioned above. Okay. So this is what section 194 is all about. Very important section practically also and academically also. Let's move ahead with the next section, that is 194O, which talks about e-commerce operator or e-commerce participant. That is talking about what? E-commerce operator is nothing but a company like Amazon, and e-commerce participant is nothing but the sellers of Amazon. So Amazon, while making the payment or while making the credit to the resident seller will deduct TDS at the rate of 1% on the gross amount of sale, not on the net amount. For example, I am Amazon and there is a seller and there is a customer over here. Now customer is coming to Amazon website and ordering something, say 50,000 rupees phone, and then I am going to pay him what? 45,000 rupees by deducting commission. But while deducting the commission, I can deduct the commission. That is my right, because that is something which I will definitely take from the seller. But while deducting the TDS, I have to deduct TDS on the gross sale, that is on 50,000 rupees, and not after excluding the TDS, after excluding the commission. And what is the timing of TDS? The timing of TDS is credit or payment, whichever is earlier. So Amazon, while making the payment to resident sellers, non-resident sellers are not covered over here. Amazon, while making the payment to resident sellers, will deduct TDS at the rate of 1% on payment or credit, whichever is earlier, on the gross amount, not on the net amount. Including the commission portion, you are supposed to deduct the TDS. Now, what if the customer directly pays to the seller? Customer is not paying Amazon and Amazon is not giving to resident seller. Customer is directly paying to the resident seller. Then also it is deemed to be credited by Amazon only, and Amazon is liable to deduct TDS in that case also. Even if the customer is directly paying to the Amazon, if the customer is directly paying to the seller, that case also Amazon is liable to deduct TDS. You cannot escape tax by directly paying to the customer, okay, to the resident seller. Now, in some cases, to some individual and HUF sellers, the government has given a relaxation. What is a relaxation? If the seller is resident, and if the seller is individual and HUF, and the gross sale does not exceed 5 lakh rupees in the entire financial year, and the seller gives you PAN and Aadhaar. So if the seller is individual HUF, and if the seller's sale in the entire year does not exceed 5 lakh rupees and seller gives you PAN and Aadhaar, Amazon will not deduct TDS. Okay, check it please. Once a transaction is subject to TDS under this section or exemption over here, then no TDS under any other provisions of the act will be applicable to avoid double deduction. So once a transaction is what? Subject to TDS over here, or it is getting exempted over here, then you should not go to other provisions and what? Attract the provisions of TDS. Then it means that this provision of 194O will prevail over all other provisions of the Income Tax Act. So once a TDS is deducted under this section or exempted under this section, you don't have to go to other section and search for the applicability of the TDS. Okay. Now, next, last but not least, that is, suppose if Samsung is making payment to Amazon for what? For advertising his phone, that is Galaxy Fold, then is Samsung liable to deduct TDS? Yes, Samsung is liable to deduct TDS in that case, because as it is not related to sale of goods or services of above nature. Sir, is services also covered? Yes. If Amazon is selling goods, then that is also applicable. If Amazon is providing services, but services are very limited in nature, every goods are covered, but services are only of two nature. That is, if Amazon is providing FTS or professional services mentioned under 194J, then only the provision of 194O is applicable. As far as goods are considered, all kind of goods which are sold by Amazon are subject to TDS, but services only two, FTS and 194J services. That is the professional services and FTS which are mentioned in 194J. Okay. Now let's move ahead with the next one. That is, there are some notifications over here. There are some relaxations which are given to certain assessees. That is, when this section is not applicable, when 194O is not applicable, along with 194Q and 206C1H also. Now these two sections you are going to see later on. Don't worry. Right now we'll only talk about 194O. 194O is not applicable when a transaction is done in securities or commodities. So in case of transactions done to stock market or commodity market, 194O is not applicable. 194O is not applicable in case the transaction is done in electricity, renewable energy certificate or energy saving certificate, etc. So then this also, in this case also, 194O is not applicable. Second, 194O is not applicable for payment gateways. Now, what is payment gateway? First of all, let me explain you what is payment gateway. One of the famous examples of payment gateway is your Razorpay. Okay. So whenever a customer makes a payment, it does not go directly to Amazon. First it go to Razorpay, then Razorpay pay to Amazon, and then Amazon pay to seller. Okay. So how it goes? First customer pay to Razorpay, Razorpay pays to Amazon, and then Amazon pays to the seller. So in this case, is the Razorpay also liable to deduct TDS? So the government has said that Razorpay is not liable to deduct TDS if Amazon has deducted the TDS. So if Amazon has deducted the TDS, then the Razorpay while making the payment is not liable to deduct the TDS. This is what it has been written over here. For that purpose, the Razorpay will take an undertaking from Amazon that it will ask Amazon that whether you have deducted TDS or not. If Amazon say yes, then Razorpay will not deduct the TDS. That is what it has been sent over here, written over here. Otherwise, there will be dual deduction of what? The same TDS. Okay. Unnecessarily, it doesn't make sense to deduct the same TDS on the same amount two times at two different places. Okay. So if Amazon has deducted the TDS, Razorpay is not liable to deduct the TDS. Next one is about what? Insurance company. What happens generally? Insurance policies which are having a ripple effect over the years. Suppose if I'm purchasing a policy of 15 years. Okay. So I'm going to policybazaar.com and I'm buying the policy. So I'm buying the policy through Policy Bazaar. So Policy Bazaar will make the payment to the respective company, and while making the payment to the respective company will deduct TDS. Okay. Now that is over. So I will make the payment to Policy Bazaar, and Policy Bazaar will will make the payment towards, say, LIC or any other company, and it will deduct the TDS on making the payment to LIC. Now, this is the first year. Now, from subsequent year onwards, what happens? From subsequent year onwards, I am not going to Policy Bazaar. I am directly making payment to LIC. So in that case also, is Policy Bazaar liable to deduct TDS? So the court, the CBDT has said that no, in subsequent year, if Policy Bazaar has nothing to do with your transaction and you are directly making the payment to the company, that is to the insurance company, then Policy Bazaar is not involved in that, and therefore the insurance agent and the insurance aggregator are not liable to deduct TDS in subsequent years. But yes, if the insurance company is making some commission payment to what? To the insurance agent, then they are liable to deduct TDS under the respective section, and it is deducted under 194D, if you remember. Okay, we have already done that earlier, that if an insurance company makes payment of commission to the insurance agent, then that is liable for what? TDS under 194D. Okay, so this is what this provision is all about. 194O, these are the three relaxations which are given over here. Next 194P, very recently inserted provision just 1 or 2 years back, which allows some relaxation to specified senior citizens under 194P. Who is a specified senior citizen? He is a resident individual having an age of 75 years or more, and he earns income only of pension from a specified bank. He only earns pension from a specified bank, and along with pension he can also earn interest from the same bank. So if the specified bank is a scheduled bank, specified bank is a scheduled bank. If a specified bank is SBI, then he should earn pension and interest both from the same bank. Then only he will be considered to be a specified person. Otherwise, he will not be specified person. Suppose if he is earning what? He is earning pension from us SBI and he is earning interest from ICICI bank. Then he is not a specified person. Now he shall be required to furnish a declaration under 12 BBA to the specified bank that he does not earn any other income, etc., etc. Specified bank is a bank which is notified by central government. Now, if these conditions are fulfilled, which are the conditions? He should be resident individual, 75 years. He should only earn pension from specified bank, and he should only earn interest from that bank. Whichever interest, FD interest, saving bank interest, RD interest, all interests are covered. There is no harm in that. And he has to give a declaration to the specified bank that he does not earn any other income. Then the bank will deduct his TDS after giving him all deductions under 80C to 80U. The bank will also give him rebate under 87A, and the bank will deduct TDS based on his slab rates. Whatever is his slab rates, bank will deduct TDS. When the bank will deduct TDS, the timing is unfortunately not given in the income tax law. The law has forgotten to give the time limit, the timing, that is whether on payment or whether on credit, that is not mentioned in the law. So if all these conditions are fulfilled and the bank has also deducted the TDS of this particular person, then this person is not liable to file return under section 139. This person is given relaxation under what? Section 139 of the Income Tax Act. That is a great benefit given to him. Okay, let's go ahead with the next one, which is a big one now, 194Q, which talks about what? Which talks about purchase of goods. If you are a buyer, you are liable to deduct TDS under this section. Which kind of buyer? If your last year's business turnover is greater than 10 crore rupees. So if your last year's business turnover is greater than 10 crore rupees, you are liable to deduct TDS in the current year. When am I liable to deduct TDS in the current year? You are liable to deduct TDS in the current year if you are buying the goods from a resident seller exceeding 50 lakh rupees. So if I am buying from a resident seller exceeding 50 lakh rupees, I am liable to deduct TDS at the time of credit or at the time of payment, whichever is earlier, at the rate of 0.1% of the excess amount. So if I am buying goods of 75 lakh rupees, I am liable to deduct TDS at the rate of 0.1% on 25 lakh rupees, not on entire 75 lakh rupees. What if the other person does not give a PAN? If the other person does not give a PAN, then I am liable to deduct TDS at the rate of 5% instead of 20%. Generally, if the other person does not give a PAN, then I am liable to deduct TDS at the rate of 20%. But under this section and under 194O, it is not 20%, it is 5%. That I have told you on the very first page of this chapter also, if you remember. Okay. So now, who is a buyer? I am a buyer whose last year's business turnover is more than 10 crore rupees. Then I am liable to deduct TDS at the rate of what? At the rate of 0.1%. If I purchase more than 50 lakh rupees from a resident seller, then on excess amount I will deduct TDS at the rate of 0.1% on payment or credit, whichever is earlier. This is what the provision has to say till now. But the real provision starts now. When this section is not applicable, this section is not applicable in some circumstances. If tax is deductible under any other section, whether deducted or not deducted, it doesn't matter. Even if it is deductible under any other section, then 194Q is not applicable. Suppose tax is deductible in 194O, then this section is not applicable. And if tax is whether deducted in 194O or whether not deducted in 194O, it doesn't matter. This section is not applicable if tax is whether deductible and then whether deducted or not deducted. Just if it is deductible in other section, then the provision of this section is not applicable. Check it, please. Now, similarly, if there is a fight between the provisions of 206C1, 1G and 1H, then the provisions of 206C1, 206-1G and 1F will overcome 194Q. But if there is a fight between 194Q and 206C1H, then 194Q will overcome what? 206C1H. Be very careful. So, there are three TCS provisions which are overriding one TDS provision. And there is one TDS provision which is overriding one TCS provision. Be very careful. Now, let's go ahead now with the next one. There is a long CBDT circular which is coming over here, which is speaking a lot of things for us, all of us. That is, first of all, adjustment for GST. Is the TDS is going to be deducted on GST portion or not? Generally, we all know that TDS is not deducted on GST portion under the income tax law. Very first point which we have done in this chapter is that only that TDS is never ever deducted on GST portion. But here there are two things with the CBDT has said that if the TDS, if you are deducting TDS, you are supposed to deduct TDS under this section on credit or payment, whichever is earlier. So if you are deducting TDS on credit, at that time you have an invoice, and if you have an invoice, you have a breakup that how much is the base price and how much is the GST. So in that case, if you are deducting TDS on credit, you are not liable to deduct TDS on the GST portion. But if you are deducting TDS on payment basis and the credit is going to happen in future, the invoice is going to happen in future, then you are going to deduct TDS on the entire portion, that is including the GST portion. Moral of the story, if you are deducting TDS on credit, do not deduct TDS on GST. If you are deducting TDS on payment, if you are making payment on, if you are deducting TDS on payment, then you are supposed to deduct TDS on GST portion also. So this is what this point has to say. Next point, what about sales? What about purchase return? Suppose I purchase goods of rupees 70 lakh rupees. So I will deduct TDS on 20 lakh rupees at the rate of 0.1%. So now I did not like the goods, so I returned it back. Now suppose if I returned it back and if the seller has refunded the money, then I have made excess payment to the department of GST of the TDS, then what shall I do? So suppose if I purchase goods of 70 lakh rupees, I paid the TDS to the government and then I did not like the goods and then I returned the goods. The seller has given me the money, refunded the money. In that case, whatever TDS I have paid to the government, I can adjust that TDS against the next purchase from the same seller. I can adjust that TDS against the next purchase from the same seller only, not other seller. Okay, so I can adjust that in future. So in future, whenever I will buy goods, I will adjust this 20 lakh TDS against that particular purchase. Now, second possibility is that suppose I return the goods and he replaced that goods to me. So if he replaced that goods to me, then nothing to be done because the goods which I purchased, I got it replaced and therefore nothing has to be done. In that case, the TDS gone to the department is absolutely correct. There is nothing wrong in that. Okay, next. Can a non-resident be buyer? Can a non-resident be a buyer or not? Yes, even non-resident can be a buyer, but if a non-resident does not have a PE in India, then that non-resident cannot be considered as a buyer. It means for the non-resident to be called as a buyer, that non-resident should have a permanent establishment in India. Check it over here. Next. What if the seller's income is exempt under certain provisions? Say, if the seller income is exempt under certain parliamentary law like RBI Act or certain other act, then am I supposed to deduct TDS? If the seller's income is liable for exemption under some law like parliamentary act like RBI Act or some other act, Asian Development Bank Act, etc., then in that case, the buyer is not liable to deduct TDS over here. Check it please. Next, is the provision of 194Q applicable in the first year of the business? 194Q will not be applicable in the first year of business because for the first year of business, the last year's turnover is 0. And for 194Q to be applicable, the last year's turnover, business turnover has to be greater than 10 crore rupees. Only then 194Q is applicable. Therefore, 194Q is not applicable in first year of business. Is 194Q applicable if your total turnover is greater than 10 crore, but your business turnover is less than 10 crore? 194Q will not be applicable in that case. For 194Q to be made applicable, your business turnover has to be greater than 10 crore. Your total turnover is not seen. Again and again, I am saying your business turnover of last year has to be greater than 10 crore. Check it, please. Now, there are cross application of 194O, 206C1H and 194Q, which are given in the next few paragraphs. So, I have made a synopsis of that for you all in very simple format. You can check on the board now. I'll just explain you. Always follow 194O first. Okay. Between 194O and other provisions, always 194O will be prevailed. Okay. If there is a fight between 194O and 206C1H, 194O will always prevail. 194O will always prevail. If there is a fight between 194Q and 206C1H, 194Q will prevail, no doubt. But even if you did collect TCS under 206C1H, it is okay. The government has given an option in both. Because in both the cases, the TCS rate is same only 0.1%. Here also the TDS rate is 0.1%. Here also TCS rate is 0.1%. So between these two sections, you have to be very careful. Be very careful. Between these two sections, you should deduct TDS first. But in case you have not deducted TDS, but he has collected TCS, then also it is fine. Both the options are correct. You will not be penalized. So 194O सबसे पहले first Between 194O and 206C1H, 194O will prevail. Between 194Q and 206C1H, 194Q should be followed. But if we do not follow and follow 206C1H, the seller collect the TCS, then also it is fine. Now, between 194Q and these sections, that I have already told you earlier also, that between 194Q and these TCS sections, then these TCS sections will prevail over 194Q. Okay, so that this is ultimately the synopsis of the entire discussion that is mentioned over there. That 194O will be having a priority. Between 194O and 206C1H, 194O will be having a priority. Between 194Q and 206C1H, you have option. And between 194Q and other TCS sections, you don't have option. You have to follow the provisions of TCS, TCS, TCS. You can take a photograph of this if you want, and then we'll move ahead with the next section. Okay, fast. Now, the next one is an absolutely new section which is added by Finance Act 2022. Which talks about TDS on benefit or perquisite which is given in business and profession. So if I am giving you some benefit or perquisite in business and profession, then the giver has to deduct TDS under this particular section. This is what this section is all about. 194R. Who is a deductor? Who is providing any benefit or perquisite relating to business and profession? So in this, the individual and HUF has given relaxation the way the individual and HUF were given relaxation in 194A, 194C, 194H, 194I, 194J. That individual and HUF will deduct TDS only if their last year's business turnover is greater than 1 crore rupees, or if their last year's profession turnover is greater than 50 lakh rupees. Otherwise, individual HUF are not liable to deduct TDS under this section. Okay. Who is the deductee? Deductee is a resident who is getting the benefit of business and profession from us. So I am giving some gift, I am giving some perquisite, I am giving some benefit, I am giving some foreign tour, etc. to my client, etc. That is a benefit which is given under business and profession. Sir, is there any threshold limit over here? Yes, the threshold limit is 20,000 rupees over here in the entire year. If the threshold crosses 20,000 rupees, you are supposed to deduct 10% of the value. You are supposed to deduct the TDS at the rate of 10%. What if I provide the TDS? What if I provide the benefit in kind? Then you have to follow the same funda which we have seen winning in kind. That if the other person, if we are giving the other person benefit in cash, then you will deduct TDS without any harm. But if we are giving the benefit to the other person in kind, then I cannot deduct TDS. Then I have to ensure that the other person has paid the tax. So the moment I ensure that the other person has paid the tax, he will bring a challan to me, he will show me the challan, and then I will give him what? Then I will give him the payment of that particular item. Then only I will release that particular item to him. What is the timing of deduction? The timing of deduction is before releasing the benefit or perquisite to the resident person. So before you release, you have to deduct TDS, or you have to ensure that the other person has paid the TDS in case of winning in kind. Okay. Now, to remove difficulty, the CBDT has brought a very big guideline which I have put it in book 2. I am going to discuss right now only in chapter number 76. A separate chapter I have put for latest circular, so that you have a special attention on that topic, because that is a latest circular topic. So I am going to that topic right now. You also come to that topic immediately, but you just go through this provision once and then we'll move on to that particular topic fast. So this is the circular which is CBDT has added under section 194R very recently, 12/2022, 76 page number 76.19. So here there are 10 FAQs which has been put by CBDT. I'll be discussing all 10 FAQs one by one. They can ask you directly in this exam in the same format. Be very careful about it. The first question which is asked over here is the giver, is the payer, is the deductor has to make ensure that the other person's income is taxable under section 28(4) or it is taxable under section 41(1). Am I supposed to ensure that, or am I supposed to deduct TDS irrespective of whether the other person's income is taxable or not? So here the CBDT has clarified that you are not supposed to ensure all those things, whether the other person's income is taxable under section 28(4) or whether it is taxable under section. You're not supposed to ensure all those things, whether the other person's income is taxable under section 28(4) or whether it is taxable under section 41(1). You're not supposed to ensure all those things. All those things are absolutely not necessary. That is required under section 195 if you remember. In 195, you have to ensure that the other person's income is chargeable to tax in India. That is not required in this section. That is not even required in 194E also. In 194E, when you make the payment toward non-resident sportsmen, then also it is not required. That is only required in section 195. Therefore, the moral of the story is very simple. When you make a payment, when you give a kind of benefit or perquisite to the other person, you are supposed to deduct TDS irrespective of whether the other person income is chargeable to tax in 28(4) or whether it is chargeable to 41(1) or whether it is chargeable or not chargeable. You have to deduct TDS irrespective of all these facts. Okay, so this is what this first question is all about. Just go through it once. Question number 2. What does question number 2 says? Question number 2 says that is it necessary that the benefit should be in kind? It is absolutely not necessary. The benefit can be in kind also, benefit can be in cash also. In fact, in 194R itself is written, the benefit can be in cash, the benefit can be in kind. If it is cash, deduct TDS. If it is kind, you have to ensure that the other person has paid the TDS. It doesn't matter whether the benefit is in kind or whether the benefit is in cash. It doesn't matter. Both the cases are covered in 194R. Okay. Next, 194R. Is it necessary that the benefit which you are giving to the other person or the perquisite which you are giving to the other person should be in the form of a capital asset? Again, the government has said that no, it is not necessary that the benefit which you are giving to the other person, maybe it may be in the form of capital asset, it may be in the form of some other asset. It doesn't matter whether it is a form of capital asset, whether it is not a form of capital asset. You are not supposed to get into the nature of capital asset, whether you are not supposed to get into the nature of the asset. It may be in the capital asset, it may be in the form of other assets. It doesn't matter. It should be a benefit or perquisite which is provided by one person to another. The nature of asset is not relevant over here. Check it, please. So now let's move on to the fourth question, which is a very, very dangerous and a very big question, but don't worry, we'll try to make it as simple as possible. Okay. Now I'm telling you first three things. First, pay attention on the first three things. Suppose if I give some sales discount to my customer, cash discounts to my customer, rebate to my customer, is that also a benefit or perquisite given to the customer? The CBT has said that no. If you give some discount to the customer, some benefit to the customer, some rebate to the customer, some sales discount to the customer, we will not deduct TDS on that. That is not a benefit or perquisite under this section. No need to deduct TDS. Second thing, this was the first thing. Second thing, if I give some free items on buying something, suppose if I tell you buy 5 shirts, I will give you 2 shirts free. Buy 10 shirts, I'll give you 2 shirts free. Buy 10 pens, I'll give you 3 pens free. So the pens, 3 pens which I am giving free, whether that will also be subject to TDS. The CBT has again said that no. If you sell something and on that you give some free items over and above the item which you have sold, then that will also not be subject to TDS. This was the second point. Third point, if you give a free sample to someone, free sample, nobody has bought anything from you, you give free sample to someone, then the CBT has said that that will be subject to TDS. Check it, please. So there are 3 points which I have said you. If you give cash discount to someone, if you give rebate to someone, if you give sales discount to someone, no TDS. If you give buy 2 get 3 free, buy 5 get 2 free, so the free items which you are giving along with the sold item, no TDS. If you are giving the sample absolutely free, then that will be subject to TDS under this section. Check it, please. This is the first paragraph which has to say this particular point. You can read it once and then we'll go ahead with the next part. Step by step, we have to go in this particular paragraph. So let's go ahead with the next paragraph. The next paragraph says that the above relaxations which are given over here, which are very restrictive, don't extend to other items. Okay, this relaxation which is given over here, do not deduct TDS, do not deduct TDS, is only very specific to that case only. Don't extend to other cases. In other cases, you have to deduct TDS, like it is given over here. Illustrative list is given over here. For example, if you give some cash incentive to someone, such as car, TV, computer, gold chain, mobile phone, other than discount and rebate, discount and rebates are not subject to TDS. But if you give incentive to someone like car, TV, gold coin, mobile phone, etc., then you are liable to deduct TDS. Or if you sponsor a trip to someone to achieving certain targets, so if I tell my vendor that if you sell this much product, then I will give you what? I will sponsor a trip for you. I will sponsor a Europe trip for you. I will sponsor a Dubai trip for you. So the sponsorship which you are giving for a trip for achieving certain target, that will also be subject to TDS. Or if you have a ticket for a free event, you have a ticket and you are giving a ticket for a free event, that is also subject to TDS. Then if you are giving free medical samples to medical practitioners, you are a pharma company and you are giving a free medical samples to your to your doctors or to your hospitals or medical practitioners or to medical shops, etc., then in that case also you are supposed to deduct TDS. This was the second part and this is just illustrative nature. Just go through it once and then we'll move on with the third part. Okay. Now the next point says that suppose if somebody has given some benefit to Mukesh Ambani, because Mukesh Ambani is an employee of Reliance Industry and Mukesh Ambani is a director, chairman and managing director of the Reliance Industry, and suppose some customers have given some benefit to Mukesh Ambani, then whether the TDS will be deducted on that also, the answer is yes, because Mukesh Ambani is not giving benefit in individual capacity. He is giving benefit through Reliance Industry to the other customer, and therefore the customer is happy with the services of the Reliance Industry, and therefore the customer has given the car to Mukesh Ambani. So in that case, if the benefit is given to the employee or directors, etc., or the owner of the company, then also TDS will be deducted. You can check it over here fast. Now the next paragraph I'll explain you with the help of an example. Suppose there is a pharma company over here and there is a doctor over here. There is a pharma company, there is a doctor over here and there is an hospital over here. Now this doctor is an employee of the hospital. Okay, be very careful. There is a triangle over here. There is a pharma company, there is a doctor who is an employee of an hospital. Now this pharma company is giving some samples to doctors. Now, whether the pharma company will deduct TDS? Yes, the pharma company will deduct TDS in the name of hospital, not in the name of doctor, because ultimately the hospital, the doctor is going to use because the doctor is an employee of the hospital. The doctor is not an independent consultant over there. So again, I'm saying there is a pharma company, there is a doctor who is an employee of an hospital, and there is an hospital over here. So the pharma company is giving the medicines in the hands of the doctor, but the pharma company will deduct TDS in the name of the hospital. Now, what hospital will do? The hospital is indirectly giving benefit to the doctor by giving medicines. So hospital will say that hospital is giving perquisite to the doctors. That is, the medicine is given to the doctor, na? So that is a perquisite given by the hospital indirectly to the doctor. So hospital will consider that as a perquisite in the hands of the doctor, and the hospital will deduct TDS of the doctor under section 192 because that is given to the doctor indirectly by the hospital only. No doubt it is given by pharma company, but indirectly it is through hospital only. He has got that sample because he is a employee of the hospital. Otherwise he would have not got the sample. So the moral of the story is very simple. The hospital, the pharma company will give the medicine. I'm telling you once and for all. The pharma company will give the medicine to the doctor, but will deduct TDS in the name of the hospital, and the hospital will deduct TDS in the name of the employee under section 192. So the pharma company will deduct TDS in the name of the hospital under 194R, and hospital will deduct TDS in the name of the doctor under section 192, and hospital will also claim the deduction. Hospital will show that as its income. That sample medicine will be shown as an income by the hospital, and the hospital can also claim that as a deduction when it is given to the doctor. Okay, check it please. Now next one is a continuation of previous one only. Now there is a hospital, there is a doctor. Now the doctor is not employee, he is a consultant. He is an independent professional, and there is a hospital. There is a pharma company, there is a doctor who is independent, and there is an hospital. Now the government has given two options. That first, the pharma company will deduct TDS of hospital, and then hospital will deduct TDS of consultant. Both of them will deduct TDS under 194R now. Because now even the doctor is what? Doctor is also a consultant. He is also a business and professional person. So his TDS will also be deducted under 194R, not under 192. So now the pharma company is giving the samples to doctor, no doubt, but the doctor is independent now. So pharma company will deduct TDS of hospital under 194R, and hospital will deduct TDS of consultant under 194R. This is first option. The second option with the government has said that if the pharma company wants to directly deduct the TDS of consultant, they can do that also. Rather than deducting TDS twice, the pharma company can directly also deduct TDS of what? Consultant under section 194R. Just check it once. Now, one last thing is over here. If the above benefits are given to a government hospital, government entity, then the provisions of this section are not applicable. You can check it once. So, if this benefit is given to a government hospital or government entity, then the provision of 194R will not be applicable. Now, the next question is, if you are going to deduct the TDS on any benefit or perquisite, how are you going to value that particular benefit? Suppose if I am going to give you a car, or if I am going to give you a jewelry or a diamond, then how am I going to value that? So, the government has said that you have to value the fair market value of that particular asset. But except in few cases, the government has said that you have to value some other ways. Like, suppose if you have purchased that benefit and then you are giving it to that. Suppose if I have purchased that car from the market and then I am giving you, then the purchase price will become the value of that perquisite. Suppose if I purchase that car for 50 lakh rupees and then I am giving you that car, then the 50 lakh rupees will become the fair market value, and that 50 lakh rupees will be subject to TDS. Now, suppose I have not purchased that and I have given you, I have manufactured that and I have given you. That is also possible. Now, I am manufacturing car and then I am giving you that as a benefit of perquisite. Then in that case, what should be the value? The value should be the amount which I charge to my customers. So the selling price which I charge to the customer, that will become the value, and that is the amount on which I am supposed to deduct the TDS. Am I supposed to include GST also for the purpose of deduction of TDS? No, GST will not be included for the purpose of deduction of TDS. So there are 2 points over here. If you have purchased something and given, then the purchase price will become the value. If you have manufactured something and given, then the price at which you sell to your customer, that will become your value. In either of the case, you are not going to include the GST portion. Check it once. Now, next point. Many times, many companies like Samsung, Apple, etc. gives lot of free product to the social media influencer for advertising purpose. For example, a new phone has come and the company has given that phone to what? Social media influencer. Now, whether that will be subject to TDS. Now, that depends upon whether the social media influencer returns that or not. If he returns that, if he advertise the product and then returns back, then there is no need to deduct TDS. But if he retain that product, that he does not retain, he keep it with himself, then you are liable to deduct TDS on that particular item. Check it, please. Now, next one is whether out-of-pocket expenses will be subject to TDS or not. First of all, what is out-of-pocket expense? Out-of-pocket expenses, like for example, if there is a chartered accountant and there is a client, and if the client says to the chartered accountant that whatever is the traveling charges, food charges, stay charges, etc., that we will reimburse to you. So what generally happens, the chartered accountant first make the payment of the hotel charges and traveling charges and food charges, and then the client what reimburses that to the chartered accountant. So whether that will be subject to TDS or not. So here the CBDT has clarified very clearly that if the invoice is in the name of the client, invoice of hotel, invoice of travel, invoice etc. of all the things is in the name of the client, then there is no need to deduct TDS, then it is not a benefit or perquisite, no need to deduct TDS. But if the invoice is not in the name of client, then the provision of 194R will be applicable. Check it, please. Now, next question is, if I keep some conference etc. for my dealer to educate my dealer so that they can sell the product properly. There are a lot of dealers in the industry. There is a manufacturer and there are a lot of dealers. And if I keep one conference for them, so if I keep a conference for them, whether that would also be considered as a perquisite or benefit, and whether the TDS will be deducted in that case. The department has said that no TDS will be deducted if the prime object is for any of the following reason. That if you call the dealers and you keep a conference to educate them regarding the new product being launched, or discussion as to how our product is better, or discussion about how obtaining orders from dealers, or discussion about teaching them sales techniques, or discussing them about addressing queries to how to address queries to the customers, or reconciliation of accounts. If you do the dealer conference for these purposes, you are not supposed to deduct TDS. It is not applicable. 194R is not applicable. But there is one condition over here. You should do this for all the dealers. You should not do this for selected dealers. If you do it for all the dealers, then no TDS is applicable. But if you do it for a selected dealer, then the TDS will be applicable under 194R. Check it, please. Next, now the three things which I am saying in these cases, the company has to deduct TDS under 194. First, the company is giving to dealer a very leisure trip. A very leisure trip means a very relaxing trip, a luxury trip, and a premium trip. Then the TDS has to be deducted. If a leisure trip is given, a luxury trip is given, then a TDS has to be deducted. Secondly, the dealer is also bringing its family members. Family members are also, his wife is accompanying, his children are accompanying, his brother, sister are accompanying, his parents are also accompanying. Then also TDS will be deducted. Next, the dealer is coming prior to 3-4 days prior to the conference, and he is also staying 4-5 days prior to the conference, then also TDS will be deducted. The TDS will not be deducted only for those days for which the conference was there. You cannot make a holiday out of that particular conference. You cannot make a pre-holiday or post-holiday out of that conference. If you do so, then TDS will be deducted under 194. Check it, please. Now, next question is with respect to 194R TDS provision in kind. So, in 194R, it is very clearly written that you can give the benefit in kind or you can give the benefit in cash also. Now, if you are giving the benefit in cash, you will deduct TDS. But if you are giving the benefit in kind, then I have to ensure that the other person has paid the tax. Now, how will I ensure that the other person has paid the tax? Now, for that, the government has given two options. Option number one is tell the other person to pay the advance tax and show the challan to me. And once he will pay the advance tax and show me the challan, I will deduct the TDS. I will release the winning accordingly. Okay. So, he has to pay the advance tax. He has to show me the challan. Once he show me the challan, I will release the perquisite and benefit in his favor. And the second one is very strange one. What the government has said that suppose if I am giving you a car, okay, so now it's suppose the car value is 50 lakh rupees. So now the government says that you have to gross up that amount. So if I have to gross up that amount, okay, I have to gross up that amount and find out the value of that particular income car. Now suppose after grossing up the value of that car becomes to 55 lakh rupees. So now deduct the TDS of 5 lakh rupees on that. So now because the value of the car is 50 lakhs, I have to gross up that much amount. Okay, so it will become 55 lakh rupees, and then I have to pay from my pocket 5 lakh rupees, and that 55 lakh rupees will be the income of the other person, and accordingly the other person will show the income of 55 lakh rupees, and accordingly he will pay the tax. So this is a very strange manner, not very important in practical life. Most of the people are going to follow the first one only, not the second one. Okay, now one last question is there over here which I'll be discussing later on along with the previous circular. So I'm keeping this discussion on hold as of now. Okay, so this is what this circular is all about. Let's go about once more, you all go through about this circular, and then we'll move ahead with the next section of the TDS. Okay, so let's go ahead with the next section after the provision of 194R, that is 206AB, which talks about what? That in some cases you have to deduct the tax at a higher rate, that is twice the rate at or 5%, whichever is higher. Now who are those unlucky people? Those are specified person. Who is a specified person? Specified person means a person who has not filed the return of the last year. The last year's return is not filed, and his last year's TDS and TCS is 50,000 rupees or more. The specified person may be a resident or a non-resident, but he will not be include a non-resident who does not have a PE. It means if a specified person has to be a non-resident, then he should have a PE. Therefore, who is a specified person? Who has not filed the return of last year and whose TDS and TCS for the last year is 50,000 or more, and he may be resident, non-resident, and in case he is a non-resident, then he should have a PE in India. Then in case if these conditions are fulfilled, then you have to deduct the TDS at twice the rate, or the rate applicable twice the rate of the respective rate, or 5%, whichever is higher. If the applicable rate is 1%, then twice the 1% is 2%, and 5% whichever is higher. If the applicable rate is 10%, then the twice the rate is 20%, and 5% whichever is higher. But this section is not applicable to certain people. Which are those lucky people to whom this section is not applicable? This section is not applicable for salary, for PF, for lottery, for horse race, for 194 IA, 194 IB, 194 LBC, 194 M, and 194 N. This section is not applicable for these sections, for these assessees. Okay, so a TDS whose assessees whose TDS is deducted under these sections, then the twice the rate, etc., all those things are not supposed to be done. Okay, now along with that, 206AA will definitely be applicable. That if a person is not showing, if the deductee is not giving his PAN, then definitely the provisions of not giving the PAN will be applicable. It means, suppose for example, there is a person to whom we are making payment for contract. Now for contract you make a payment of you deduct TDS of 1%. So if the other person is fulfilling these conditions, then you have to deduct twice the rate or 5%, whichever is higher, then the answer will become 5%. Now after that you have to ask that other person the PAN. So if that person is not giving PAN, then the TDS will not be deducted at 5%. Then the TDS will be deducted at 20%. This is what this provision has to say, that along with 206AB, you also have to apply the provision of 206AA, that is the provision of PAN. Is it clear to everyone? Now 196, that is TDS is not applicable when you make the payment to these people. When you make the payment to government, RBI, mutual fund, or any corporation established under central or act whose income is exempt, there is no need to deduct TDS like RBI, etc. RBI is governed under what? Central act, and the income of the RBI is exempt under RBI act, and therefore there is no need to deduct any TDS. Next, there is some relaxation given under section 197 that if the other person says that my income is below the basic exemption limit or my income is deductible at a lower rate, then the other person can go to assessing officer, can get a lower deduction or no deduction certificate, will give that certificate to the payer, and accordingly the payer will deduct TDS. Plus, if he wants this relaxation, then the other person, that is the payee, has to give his PAN. Without a PAN, this particular thing is not possible, and this is possible under all these 14-15 sections, as you can see over here. You can check it over here. These are the 14 to 15 section for which he can go to the assessing officer and get what? Get a lower deduction certificate. Now, if he does not want to do that, there is one more option which is available of self-declaration of giving 15G and 15H form. And 15G and 15H form can be given for which all sections? It can be given for interest on securities. It can be given for other than interest on security. It can be given for PF payment. It can be given for life insurance payment, rent, insurance commission. That in this case, you don't have to go to assessing officer. The payee will directly give the declaration in the form of form 15G and 15H. One is for senior citizen, one is for non-senior citizen. The payee will give the declaration to the payer, and accordingly the payer will not deduct the TDS. Again, under this section also, giving of PAN is absolutely mandatory. Without PAN, this is not possible. Next. This declaration of 15G and 15H cannot be given by a company or a firm. This declaration cannot be given by other than senior citizens also if their aggregate limit of income is greater than the basic exemption limit, even though the tax payable is nil. For example, I am not a senior citizen, and if my gross total income is 3.5 lakhs and my net taxable income is 2 lakhs, then also I cannot go for this particular section, because the law says that in case of other than senior citizen, if the gross total income is also above basic exemption limit, even though the taxable limit is nil, then also you cannot go for this particular thing. But senior citizens, they can go. I have given an example on this in the class. You can go and check over there. Okay. Now, the government has put a notification, put up amendment in Finance Act 2020 over here, that if they want, they can relax anybody from non-deduction of TDS. They can relax anybody from lower deduction of TDS, so on and so forth. But they have not brought any notification so far. Let's go ahead with the next point, that is filing of TDS returns. By when the TDS return has to be filed and by when the TCS returns have to be filed. The TDS returns and TCS returns have to be filed quarterly, 30th June, 30th September, 31st December, 31st March. And for TDS, the dates are slightly late. For TCS, the dates are slightly earlier. For TDS, for June quarter, it is 31st July. For TCS, it is 15th July. For September quarter, it is 31st October. For TCS, it is 15th October. For December quarter, it is 31st Jan. And for TCS, it is 15th Jan. And for March quarter, it is 31st May. And for TCS, it is 15th of May. So for TCS, it is 15th. And for TDS, it is 31st. Okay. Next. What are the consequences of TDS default? There are two consequences of TDS of default. First is, if there is a default in deducting of TDS and paying of TDS, then the department will send you a show cause notice under 201 subsection 1 treating you as assessee in default. If there is a default in deducting and paying TDS, then you will be treated as an assessee in default, and then the provisions of assessee in default will be attracted on you. If there is a delay in deducting, then there is a minor interest charge which you have to pay 1% per month part thereof for deduction, for non-deduction, for delay in deduction, and for delay in paying it is 1.5% from the date of deduction. Okay, so be very careful. If there is a default means you are a very big culprit. You are not deducting TDS, you are not paying TDS for a very long period of time, then the AO will send you a show cause notice. If there is a delay, then 1% for late deduction, if 1% for 1.5% for late payment. Now the question is, this 2011A, who will determine? So there was a confusion regarding this. Who will determine this? So the Finance Act 2022 has clarified that the 2011A interest will be determined by the assessing officer. The assessing officer will pass an order and will determine the 2011A interest, and accordingly you have to pay that particular interest. Okay, check it please. Next. Once an interest is imposed under 220, that is once an interest is imposed as per assessing default, then the interest under 2011A will not be imposed. So if you are treated as an assessing default, then these interests will not be imposed on you. Next. There was an assessee who was saying that I forgot to deduct the TDS. Will still 2011A will be attracted. There was a bona fide reason for not deducting the TDS. The court has held that in the case of Sun Outsourcing Solution Private Limited, that the failure to deduct TDS will attract 2011A automatically, even if there is a bona fide belief that there is a bona fide reason, even if there is a genuine reason for non-deduction, then also the TDS has to be deducted and it has to be paid. And if you have not paid, the interest under 2011A will be automatically attracted on the assessee. Okay. So you cannot make an excuse that there was a bona fide reason for not deducting the TDS. Still, the interest under 2011A will be applicable. What is the penalty for failure to deduct TDS? The penalty for failure to deduct TDS or penalty for failure to pay TDS under 194B, that is provision to 194B, that is where you have to make sure that the other person has paid the tax in case of winning in kind. So this is talking about winning in kind. So if you fail to deduct TDS or if you fail to ensure that the other person has paid the tax, then you will be liable for a penalty under 271C, which will be equivalent to tax not deducted or tax not paid. So whatever is the tax which is not deducted or whatever is the tax which is not paid, that much penalty will be imposed on you, and that penalty will be imposed by the Joint Commissioner. So what is the penalty and the fee for late filing of what? TCS return. So if you fail to file the TCS return on time, then there is a fee on the 234E which is equivalent to 200 rupees per day during which the failure continues, but that fee cannot exceed the TDS and TCS amount. It will be maximum equivalent to TDS and TCS amount, and that fee shall be paid along with the filing of TDS and TCS return. But along with that, there is one more consequence which is standing for you, which is under 271H. Sir, what is 271H? 271H talks about fails to file the TDS return on time, which is same as this, or fails to furnish incorrect information in the TDS return. So if you fail to file a return, then also this penalty will be imposed, or if you give an incorrect information in the TDS and TCS return, then also this penalty will be imposed. How much is the penalty? It is 10,000 rupees to 1 lakh, which will be imposed by AO. Sir, can I just get any immunity from this penalty? Yes. If you want immunity from this penalty, listen to my following conditions. First of all, TDS and TCS has to be paid on time. Second, interest has to be paid on time. Third, fee under 234E has to be paid on time. Plus, fourth, you have to file the TDS return and TCS return within 1 year. Pay tax, pay interest, pay fee under 234E and file the TDS return within 1 year. Then no penalty under this section will be imposed on the assessee. Only 234E can be imposed. Sir, can 234E be waived? Yes. If CBDT wants, CBDT can waive this also. You can write this over here. CBDT has the power to waive this, and if the CBDT wants to waive it, CBDT has the power to waive it. Okay, they can do so. Now let's come to what the next part of this chapter, which is a smaller part, not as big as TDS. Let's talk about TCS. In TCS, there are multiple categories. 206C subsection 1, 206C subsection 1C, then 206C subsection 1G, then 206C subsection 1H, then 206C subsection 1F. These are the these are the 5 categories of TCS which we have to learn one by one. So first of all, we are trying to learn the TCS under 206C1. In TCS, the seller is liable to collect the TCS at the time of debit or at the time of payment, at the time of receipt, whichever is earlier. So seller is liable to collect TCS from the buyer in case of the following goods. So in these goods, you are supposed to collect TCS. Alcohol 1%, tendo leaves 5%, timber obtained under forest lease 2.5%, timber obtained by any other mode other than the forest lease 2.5%, any other forest product not being timber or tendo leaf 2.5%, scrap 1%, mineral coal, lignite, iron ore 1%. These are the 7 products on which TCS is applicable under section 206C subsection 1. The seller will collect TCS of the buyer. Sir, buyer will include what and buyer will not include what? I will tell you, buyer will not include what? Buyer will not include public sector company. It means if you sell these 7 goods to public sector company, do not collect TCS. Buyer will not include central government, state government. Buyer will not include club. Buyer will not include embassy people. And buyer will not include any person who is a buyer who is buying these goods for his personal consumption and personal consumption. If you are buying these goods for personal consumption, there is no need to collect what? TCS, etc. Who is the seller? Seller is everybody. Seller is everybody. Company, firm, LLP, central government, state government, anybody, agency, etc. But in case of individual and HUF, there is a relaxation to seller, that individual and HUF will become seller under this section only if the last year business turnover is greater than 1 crore or last year profession turnover is greater than 50 lakh rupees, just like the other sections 194A, 194C, 194H, 194I, 194G. This is also applicable here also. Okay, so this is a similar provision which is applicable to the previous sections also. Next. This section is not applicable. It means when a seller sells these 7 products, he is not going to collect TCS in case the buyer is a resident and buyer gives a declaration that he is buying the goods for manufacturing or for the purpose of generation of power. So if the buyer is a resident and if the buyer gives a declaration and says that I am buying this good for the purpose of manufacturing or generation of power, I am not buying this for trading purpose, I am not buying for selling to someone, but I am buying for my in-house consumption, then there is no need to deduct and there is no need to collect any TCS from such buyer. And in that case, you have to deliver that statement to the CID before 7th of the following month. That the declaration which you have taken from the buyer, you have to give to the CID before 7th of the following month. So this was the first category of TCS. Let's move to the second category of TCS, where you are granting lease or license or entering into a contract with any person regarding what? You have lot of parking lots, so you are giving your parking lots on lease to someone, or you are giving your toll plaza on lease to someone, you are giving your coal mine etc. on lease to someone, or you are giving your quarry on lease to someone, and you are taking lease charges from them. Though at the time of debit or at the time of receipt, whichever is earlier, you are supposed to collect TCS at the rate of what? 2% under section 206C subsection 1C. So this is mainly in respect of service. This is not goods, this is service, but the previous one was goods. Okay, now the next one is extremely important, which is added by Finance Act 2020. Now listen carefully. If any person wants to send money out of India under the liberalized remittance scheme, then the authorized dealer will collect TCS at the rate of 0.1%. Be very careful, in excess of 7 lakh rupees. It will collect TCS at the rate of 5% in excess of 7 lakh rupees. So authorized dealer, if you want to send money out of India, he will collect TCS at the rate of 5% in excess of 7 lakh rupees. So he will collect TCS when? At the time of debit or at the time of receipt, whichever is earlier. Be very careful. So if you are transferring 10 lakh rupees out of India, then the TCS will be collected on 3 lakh rupees at the rate of 5%. But now listen carefully. If you are going out of India for roaming somewhere, then you are making the payment to seller of an overseas tour package program, OTPP, then in that case, he will also collect TCS at the rate of 5%. But now the threshold of 7 lakh is not applicable for you. Here there is a threshold of 7 lakh applicable. Here there is no threshold of 7 lakh applicable. It means if you are going out of India for touring purpose, and if you are making a payment of even 2 lakh rupees, your TCS will be collected at 2 lakh rupees. This is what this particular provision and this particular provision has to say. These two proviso says the same thing what I have said you. Now third proviso, be very careful. If you are taking a loan from an financial institution in India, if you are taking a loan from financial institution in India and you are sending money out of India for education purpose, if you are taking loan from say SBI etc., sending out of India for education purpose, then the TCS is very less. It is only 0.5%, and that too in excess of 7 lakh. Here also you will get 7 lakh exemption. So here authorized dealer you will get 7 lakh. For OTPP you are not going to get 7 lakh, but here you will get 7 lakh also, and 0.5% of your excess amount, relaxation in the tax rate also. Okay, next, no TCS is to be collected. Be very careful. If by the authorized dealer, if the seller has already collected the TCS. So if the seller has already collected the TCS under some other provision, then there is no need to collect TCS by authorized dealer. Okay, then further this provision shall not apply if the buyer is liable to deduct TDS and such amount has been deducted. So if the buyer is liable to deduct TDS, then the provision of this section shall not be applicable. For example, I am a buyer and you are a tour operator, and I am making you payment and I am deducting TDS under 194C because I am a tour operator. So if I have deducted TDS under 194C, then the buyer is not, then in this case the seller is not liable to what? This provision shall not apply to that buyer. Okay, similarly, if the buyer is central government, state government, embassy, high commission, legation, commission, that is local authority or any other notified person, then also this provision is not applicable. One more important thing which I would like to tell you, where students get confused. Sir, if here we will get 7 lakh exemption, yes, here you will get 7 lakh exemption. So this 7 lakh exemption and this 7 lakh exemption for foreign education etc., is this separate? Yes, both of them are separate because both of them are in separate provisos. So this 7 lakh is a separate exemption, this 7 lakh is a separate exemption. While solving the problem, you have to be very clear about that. Okay, now let's move on to the next section, which is a relating section to 194Q, that is 206C 1H. 206C 1H is applicable to a seller who has sold, who has a business turnover of more than 10 crore in the last year. Who is a seller? First of all, let us define the seller. Seller means a person whose business turnover in the last year is more than 10 crore and does not include a person as notified by central government. If central government has notified a particular person as a seller that he should not be a seller, then he is not a seller. Then he is not liable to collect TCS. Now, the second question, who is a buyer? Buyer is a person who purchases goods, not services. Buyer is a person who purchases goods, not services, and buyer does not include all those people who are mentioned in 206C1G also. That is central government, state government, embassy, high commission, legation etc., or any other notified person. The government has notified a person, non-resident who does not have a PE, that will also not be called as a buyer. It means if a non-resident has a PE, then that non-resident can be called as a buyer. If a non-resident does not have a PE, that non-resident cannot be called as a buyer. So I have defined you buyer, I have defined you seller. Now if the seller is selling goods of greater than 50 lakh rupees in a previous year, other than the exported goods, on exported goods he will not collect TCS. He will not collect TCS under 206C1, that is alcohol etc., because for that there is a separate section. He will not collect TCS on 20661F because for that there is a separate section. He will not collect TCS on 2061G because for that also there is a separate section. So apart from these 4 items, he has to collect TCS at the rate of 0.1%, but here on receipt basis, not on debit basis. Here on receipt basis, he has to collect TCS, not on debit or receipt, whichever is earlier. Be very careful. In excess of 50 lakh rupees. So suppose apart from these 4 goods, if he sells any other goods, he has to collect TCS at the rate of 0.1% on the excess of 50 lakh rupees. Suppose he is purchasing 70 lakhs, he is selling 70 lakh rupees goods. So he will collect TCS on what? On 20 lakh rupees. Now, there are some provisos. If the buyer has not given PAN, generally if the buyer does not give a PAN, you know what happens in case of TCS? In case of TCS, what happens? I'll show you. Generally, if the buyer does not give a PAN, then in case of TCS, you have to collect TCS at the twice of rate or 5%, whichever is higher. This is the provision for TCS not giving PAN. But here there is a relaxation. If the buyer is not giving a PAN, then twice the rate or 1%. It is not 5%. It is twice the rate or 1%, whichever is higher. Further, the provision of this section shall not apply if the buyer is liable to deduct TDS. For example, if buyer is liable to deduct TDS under 194Q and the TDS is deducted under 194Q, then 2061H will not be applicable. That I have told you earlier, that 194Q and 2061H, who will win? 194Q will win. If 194Q you do not deduct TDS, then you can deduct TDS, then you can collect TCS under 2061H. So this is what this provision is all about. Next. Adjustment for sales return, discount, indirect tax. You are not supposed to do any adjustments of sales return. You are not supposed to do any adjustment of discount. You are not supposed to do any adjustment of GST, etc. Nothing will be done. Even GST will be included while collecting TCS. While deducting TDS, you are not supposed to include GST. But while collecting TCS, you are supposed to include GST. Be very careful. Further, there is a relaxation given to what? Foreign airline companies. If the foreign airline companies come to Indian airports and they fuel their tank, they fill their tank with fuel, then there is no need to collect TCS from the foreign airline company. Check it, please. So now let's move on to the next category of TCS, that is on sale of motor vehicle. So if any person sells motor vehicle exceeding value of 10 lakh rupees, they are liable to collect TCS at the rate of 1%. 1% will be collected as TCS. So will the TCS will be collected in case of every sale? Suppose, for example, if a manufacturer is selling to dealer, then also it is applicable. Then the 2061F is not applicable. If the manufacturer is selling to dealer, then 2061F is not applicable. Similarly, then it is applicable when a dealer is selling to customer, then 2061F is applicable. If the manufacturer is selling to dealer, then 2061F is not applicable. Next one. Suppose if I go to a particular showroom, and buy 3 vehicles of 7 lakhs each, 7 lakh, total 21 lakhs. Is the TDS applicable? Is the TCS applicable? The answer is no. The limit of 10 lakh is applicable on each and every vehicle separately. If I buy 3 vehicles totaling more than 10 lakh rupees, then the TCS is not applicable. The single vehicle value has to be exceeding 10 lakh rupees. Otherwise, TCS is not applicable. Now, the TCS under this section is not applicable in certain cases if you sell to these people. If the buyer is central government or state government or any embassy or any high commission, etc., TCS is not applicable. If the buyer is a public sector company which is engaged in the business of carrying passengers, TCS is not applicable. If you remember that I have told you in class also, that if you sell to BEST bus or local state transport agencies, then TCS is not applicable in that case. Now, this is a very important clarification given by CBDT, which says that under section 206C1H, if you remember, in 1H, the government has removed from 1H the provisions of 1F. The vehicles which are mentioned in 1F are excluded from 1H. So the question is, are all vehicles excluded from 1H? The CBDT has said no. Do you remember that from 1H there are 4 kind of TCS which are excluded? One which is exported, one which is 206C1, one which is 2061G, and one which is 2061F. So 1F, are all vehicles excluded from 1H? No. Only those vehicles are excluded from 1H which are covered in 1F. So if certain vehicle which is not covered in 1F, if it is not covered in 1F, then it will come in 1H. Now, what is not covered in 1F? What is not covered in 1F is something which is sold to dealer. If a manufacturer sells car to dealer, then 1F is not applicable. But then 1H will be applicable subject to the conditions of 1H. Similarly, if you are selling vehicle of less than or equal to 10 lakh rupees, then 1F is not applicable. But if you are selling aggregate vehicle in the entire year more than 50 lakh rupees, then 1H will be applicable. Suppose if I am selling you 8 vehicles of 8 lakh rupees each, 1F will not be applicable because every vehicle is less than 10 lakh rupees. But the aggregate vehicle is more than 50 lakh rupees. Therefore, 1H will be applicable. Similarly, this is what this particular provision has been written over here. Okay. Now, let's go ahead with the next one, 206CCA. 206CCA is similar to what we have done earlier in TDS in 206AB. That in some cases, In some cases, you have to collect twice the rate or 5% of TCS. Which is that some cases? In case of specified person, who is that specified person? The same provision. Specified person is a person who has not filed the return in the last year and whose last year TDS and TCS is 50,000 rupees or more, and that specified person may be resident, non-resident, but he will not be a person who does not have a PE. Okay. So in that case, you have to collect TCS at the rate of twice the rate or 5%, whichever is higher. Check it please. And even you have to apply the provisions of no PAN cases over here. Check it please. So let's move on to the next section, that is 269 ST and 271 DA. This section prohibits any person to receive 2 lakh rupees or more in cash from any person. If you want to receive 2 lakh rupees or more from any person, you have to receive by 4 modes. 4 modes are account pay check, account pay draft, ECS or such other electronic mode. You should not receive by any other mode other than these 4 modes. Now, there are ways to calculate this 2 lakh rupees. That is, first is same payer in a day. Same payer in a day means if Mr. A is paying you 70,000 rupees cash in the morning, then in the afternoon again 70,000, and then evening again 70,000, then in the entire day he is paying you more than or equal to 2 lakh rupees cash, then you are gone. 269 ST will be attracted and you will be liable for penalty under 271 DA. Okay, so in the entire day you cannot take 2 lakh rupees or more cash from any person. You have to receive, you have to receive by the 4 modes which are mentioned by the law. Now, same transaction, when you talk about same transaction, then you cannot receive 2 lakh or more in cash in different days also. For example, if I have sold you goods of 3 lakh rupees today and I have made an invoice of today's date, 3 lakh rupees goods sold to you. Now, if you pay me today 75,000 cash, tomorrow 75,000 cash, day after tomorrow 75,000 cash, and the day after that 75,000 cash, totaling 3 lakh rupees you have paid me cash, but the transaction is of a single day, then also 269 ST and 271 DA will be applicable. Or if you make me payment for a certain event, I am an event manager and I am managing your Roka ceremony, I am managing your engagement ceremony, Sangeet ceremony, your wedding function, your ceremony, your reception function, I have managed all of them, and you are making me payment by cash for all of them, then also taking together all of them, it should not exceed 2 lakh rupees or more in cash. So if it exceeds 2 lakh rupees or more in cash, then I am liable for what? The person who received 2 lakh rupees or more in cash is liable for penalty under 271 DA because 269 ST will be attracted. Now, suppose I am an NBFC. This is a very important CBDT circular issued in 2017. Suppose I am an NBFC and I have given a loan of 20 lakh rupees to you, okay, or I have given a loan of 2 crore rupees to you, okay. Now, this giving of loan is one single transaction. Now, if you are making me payment of 1 lakh rupees every month in the form of EMI in cash, whether 269 ST will be attracted. The government has said that you should not aggregate all the EMIs and consider the limit of 2 lakhs for NBFCs. For NBFC, every EMI paid by the customer will be considered as a single transaction, and every EMI paid by the customer will be considered as a single transaction, and therefore 269 ST will be attracted when single EMI exceeds 2 lakh rupees or more. So if single EMI is 2 lakh rupees or more, then only 269 ST will be attracted and not the aggregate of all the EMIs. Be very careful. Now, this section is not applicable in certain cases. When restriction not apply, when any receipt is by government, when the money is received by government or banking company or post office or cooperative bank, this section is not applicable. This section is not applicable for transactions referred to in nature under 269 SS, and this section is not applicable for such person as notified by central government. So has the central government notified any person? Yes, the central government has given a big notification over here, in which case this section is not applicable. When the receipt is by any person from a bank. So if you go to bank and withdraw money from bank, if you go to bank, and if you go to post office, or if you go to cooperative bank and withdraw money from cooperative bank, there is no harm in that. Obviously from bank I will withdraw cash only now. What else I will withdraw from bank? When the receipt is by a banking correspondent, when the receipt is by white label ATM operators, which we have already done earlier, okay, when the receipt is from an agent, which is by an issuer of a prepaid instruments as per the RBI Prepayment Settlement Act, when the receipt is by an credit card company, so if you make a payment of credit card in cash to the credit card company, they can accept the money in cash. And when the receipt is which is not includable in the total income under section 1017A, so if it is in the nature of some awards etc which is mentioned in 1017A, you can accept that cash. There is no harm in that. Okay, now there is some relaxation which is given to farmers and agriculturists. So suppose I am a farmer, you are a cultivator or you are a trader. So if a trader makes any payment to the farmer in cash, it is allowed. There will not be any disallowance. There will not be any implication of 269 ST. There is no need to quote any PAN etc also in that case. Okay, so it is allowed. So if I am a trader, you are a farmer, I am purchasing some agriculture products from you and I am making the payment to you in cash, it is allowed. The disallowance will also be not made under PGBP. You will also not be liable for what? 269 ST. Don't worry about it. Okay, next, what if 269 ST is applicable? If 269 ST is applicable, the Joint Commissioner will impose a penalty on you. He will give you a sufficient opportunity of being heard, definitely, but he will impose a penalty equivalent to what? equivalent to that much cash received. So whatever is the cash received from by you, that much amount of penalty can be imposed by Joint Commissioner. Next. During the second wave of COVID, the government has given a relaxation, that is from 1st April 2021 to 31st May 2021. Everybody knows that these 2 months were draconian months for the entire country. These 2 months were one of the worst period of our entire nation's life of the last 75 years. That is the second COVID period. So during that period, the government has given a relaxation to the hospitals and dispensaries to accept the payment in cash. Okay, so you can accept the payment in cash from the patient, but you have to take the PAN and Aadhaar of the patient and the payee and the relationship between the patient and the payee. So whomsoever, suppose I was admitted, so and my father is making the payment in cash to the hospital, so that was accepted during those 2 months. The hospitals were allowed to take cash, but my father has to give a detail of Aadhaar, PAN, etc. And he also has to give the detail that what relationship he holds with me, that he is my father, I am his son. He has to give all those details. Okay, to check it over here, these 2 months the government has given you relaxation. I don't think so now it is much important, because now this is the past period discussion. Right now it is not relevant. Now last thing over here in this chapter, and last thing for this revision video, next will continue in the next revision video, that is, if you are doing a business and if your last year turnover is greater than 50 crore rupees, then you have to keep certain mode of payment in your business. Which are those certain mode of payment that government has prescribed? Like debit card powered by RuPay has to be there in your business, UPI interface has to be there, UPI interface QR code has to be there in your business. So if your last year turnover is greater than 50 lakh rupees, you need to have these things in your business. If it is not there in your business, then till the time it is not there in your business, you have to accept the payment by these modes. These are one of the most common mode of payments in today's terminology, in today's world. And therefore, if you do not install these payments in your business, the government will impose a penalty under 271DB of 5,000 rupees per day for every day till the time you don't install this particular mode of payment in your business. And Joint Commissioner will impose this penalty, and he will impose this penalty after giving you an opportunity of being heard. Don't worry. Okay. Now, last but not least, this provision is not applicable to those people who do only B2B business, that is business to business customers are there. No B2C customers are there. So if I am doing only business to business transactions, and if my 95% of the receipts are by other than cash, if I am doing only business to business transaction, and if my 95% receipts are only by other than cash, then this provision is not applicable. I may not install these things in my business. CBDT has clarified this in 2020. So this is what this great topic is all about. The TDS and TCS, I have tried to revise that in full English. I have not uttered a single word in Hindi. If I have spoken in Hindi, I am really sorry for that. I am not supposed to speak Hindi in these lectures. Okay, I hope you all have enjoyed the lecture. If you have enjoyed the lecture, have some courtesy to have a comment below, so that encourages me also to do what? To upload further lectures as soon as possible, and spread these lectures with all of your friends in South India, especially the southern part of India who struggle in understanding Hindi. I understand your problem. Okay, don't worry. So I will continue to upload the lectures in English to the extent it is possible, and in the same manner the way I do it for the Hindi students. So take care all of you. Bye. We'll continue the discussion with the next topic in the next revision video soon. Take care all of you. Bye.